turbulence, I would watch the flight attendants. They're not nervous than I'm not nervous. Financially, I'm a flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, one click. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinckley. Catch me on Fast Market. Weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. On the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. Missed out on today's market headlines? Get caught up and catch the rest at SchwabNetwork.com. Available anytime, anywhere, on any device for free. I'm Nicole Petalidis, host of Trading 360 and the Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions. And I watched my mother go through being a single mom. At the end of the day, my mom raised three children, including myself. And so once the client knew that he was hurt, they were arguing with her. The client don't care how much you know until they know how much you care.
Welcome back to Morning Trade Live. We have about 15 minutes before the opening bell. Let's take a look at what the futures are doing. Still going a whole lot of nowhere, but we do see some green on the screen. The NASDAQ looking to be the outperformer today, although only up about 26 points or 0.2%. Meanwhile, the S&P about 0.2% as well. Dow and Russell pretty flat. Let's see if they can pick up steam as we head into the opening bell. Also, let's take a look at what the futures products are doing right now. 10-year yield actually up about 1.5%, trading around 4.6% right now. Crude, meanwhile, also higher up about 1.6%, trading at $81.80 a barrel. And hey, look at this, Bitcoin higher as well, 35,380. Also taking a look.
Good morning. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, November 6th. We've got about 13 minutes to go. First 15 minutes of the day, usually taking profits off the table, waiting for algos to take care of imbalances, and then looking for stocks with high relative volume. I posted a few in the alerts channel and in the trading room. Stocks that have high relative volume pre-market. Stocks in the top 10, top 20 of the NASDAQ. Those are usually good day trade candidates. I posted that as well. Those top 5 usually stay in the top 5. Tesla's number 2. And remaining number 2 at the moment. Ross Stores, ROST. Retail did pretty good last week. We're looking for a follow-through. In the weekend video, we talked about the 10-year yield and the US dollar, both of those fading. The 10-year sitting on top of the 50-day on Friday. It is grinding a little bit this morning, grinding a little bit higher. So we want that lower along with the US dollar. Let's see what the dollar's doing. DXY. Dollar 105. Let me just check. Okay, 10 years at 4.6. Was trading 4.96, and before that, over 5%. To start last week, we had all sectors were oversold and at lows to start Monday trading. On Tuesday, we had a big change. On Tuesday, we had a big change in the number of stocks trading above the 50-day. That reversed. A great signal at reversals, highs at the peaks, higher highs, and at the lows. Pivots, pivot highs, pivot lows. A good indication of what you should anticipate. Doesn't mean that we can't go higher, but we are near resistance at the moment. Here is the way we left off on Friday. Good morning, everyone. We finished up on Friday with 4.5, nearly 5-1 on the NYSE and the NASDAQ. I don't need to tell you that we ran up pretty quick. Now we're looking at this pivot right here, second week of October. We hit that high. If we push through that today and start heading towards the 200-day, the red line, number of stocks trading above their 50-day, big surge last week on Tuesday. That started off at about 15, 18%, and then took off to the upside Wednesday and especially Thursday and Friday. Number of stocks above the 200-day reversed. Great signal indicator to give you a little bit more confidence and confirmation that institutions are actually bullish. We can also look at the advanced decline percent. Covered this in the weekend video. Just because we're at plus 30 does not mean we need to pull back. You can see back here in April, we went above plus 30 on the NASDAQ, mid caps, and large caps. Price action just went sideways. So we can consolidate. It's just telling you the number of stocks advancing versus declining on a percentage basis is getting near an extreme level. So we want to watch that. In addition, NIMO hit plus 98. NIMO, it closed at 95.86. The black line I'm also watching. And NYSE, which is the first crossover since June. Bullish crossover after an extended move lower, 3 months down into the seasonally strongest months of the year. This should be pretty exciting for you if you've been waiting for a trend to develop. Looks like that's what we're starting. Doesn't mean we'll go straight up from here. I wouldn't be surprised to see a little give and take, a little back and fill. The two brothers back and fill. And trade inside of Thursday and Friday's action, maybe Friday. Right now we look pretty good. Futures, we're up at 43.84. We know that the call wall shifted up to 4,400. That's a good sign. And we know that gamma levels are telling us to expect tighter price action, not as wide as we saw last few weeks, last few months. Price action is tightening up. If you read the gamma update, you'll know what I'm talking about. Reversion should work a bit better than it has in the last few sessions. Being short the VIX is working, and volatility. S&P options volatility premium has eroded. All right, so looking at some opportunities for call spread selling overhead. All right. We have 6 minutes to go for the opening bell. 6 minutes.
Well, growth at 1.5% certainly isn't recessionary, although it is a slowdown. But we talk so much about the long and variable lags of interest rates, both in terms of bringing down inflation, but also in terms of their economic impact. Do you think that we're out of the woods when it comes to a recession in 2024?
All right, so we got 4 minutes to go. Let me get Woody up and running. Okay, so we got the Fed Cook speaking at 11. We got a 6-month bill auction. Those have been market moving lately. 6-month bill, 3-month bill auction. Fed loan officer survey at 2 o'clock. All right, so we should see a lot about more information about loans and homes in particular. Last week we had, by the way, movement in real estate, most highest performing real estate, interest sensitive sectors like real estate and builders. Okay, with yields pulling back, people that are looking to buy a home may seize the opportunity with interest rates maybe moving lower. All right, so that's something to watch. Okay, we don't have a crystal ball, but they were outperforming last week. Look at the volume on XHB, the builders. That's pretty indicative of institutions jumping in. These stocks like Toll Brothers, all of them popping last week. Beazer Homes, KB Homes, Pulte Homes. They're all gapped up. I wouldn't chase them. I would just keep an eye on them because you might get an opportunity there. Got 2 minutes to go for the opening bell. 2 minutes to go. All right. First 15 minutes, I'm not doing much of anything except taking profits off the table, per usual. Waiting for algos to take care of imbalances. Then around 9:45, 9:50, right before opening range is done at 10 o'clock. We're looking for high relative volume stocks. I'll keep posting those. Pre-market, we had a few names. All right, Tesla's still number two. Still number two on the NASDAQ 100. Tesla. Retail was pretty strong last week. Watch your favorite retail names. Tesla is now number three. Align Technologies, ALGN. That one's number one on the reversal potentially. ALGN. Okay, let's see. Nvidia's up 3. So we got some movement in the FANG stocks. I wouldn't be quick to jump on the bus. You could see a little profit taking. Be careful. Tesla's higher. Tesla's up $4. Market's on the move. Expecting volatility, VIX to compress this week. All right, we got bulls coming in early. There goes Meta. Google. All right, Amazon's on the move. Amazon had pulled back. Amazon. Microsoft. Microsoft with the follow through, most likely. There goes Microsoft. All right, Cadence Design. A lot of dark pool activity on Cadence Design. Okay, 255.85 needs to get above that. Builders First Source, BLDR also. Chipotle Mexican Grill, following through. And MGM, some of the casinos, MGM, nice pop on MGM. MSCI, nice reversals. Okay. Okay, on Friday, a lot of people were concerned that Apple was going to pull back. Not working out for the bears so far. Apple pushing a bit higher. Okay, let me get to Apple. Okay, Apple looks like it's going to push. Okay, Apple. Okay, pushing higher. Apple. Keep an eye on Apple. Microsoft following through. The bank stocks being bought. Snowflake pulling back. Google is flat. All right, so we got a little bit of choppy action. Mhm. All right. Okay, Apple continuation. Apple. Apple following through, filling the gap. Apple filling the gap. Okay, Apple. Okay, Apple continuation into this gap. Apple looking pretty good. Let's look at the 60 minute. 60 minute. Okay. Okay, so here is a 60-minute Hinkanashi. What I'd be looking for if I was thinking about being short Apple, or I thought I was concerned about Apple, I'd be looking for that first red candle and then watching. For now, we have black candles. Technically, make that green. A little hard to read. Okay, it looks a little better there. Okay. So Apple looking pretty good. Apple following through. All right, so Apple continuation looks pretty good. Right at resistance. Thursday, we closed right in that area. Friday, we gapped down. Looks like Apple wants to go so far. Okay, Apple's off my screen here on this. All right, that looks good. Apple's on a buy as well. Okay, so let's see who's getting the most action this morning. UPS with almost 10 times volume. Let's take a look at UPS. UPS, not interested. Um, Open Door Technologies, OPEN, open 1.7 times. Nah, not interested there either. Kohl's, KSS, Kohl's. All right, trending. Kohl's is trending. Retailer, Kohl's, KSS is trending. Okay. Volume was above average on Friday. We're continuing there. Right now, we see 26 times normal volume on Kohl's. That's pretty interesting. Stocks that institutions were buying last week showing up on IBD's scanners. Palantir was one. Okay, that's consolidating today. All right, New York FANG index, New York FANG, okay. Trying to break out. New York FANG is trying to break out. Okay, so New York FANG index, still a little early. I wouldn't jump in feet first just yet because we are at resistance. You can see that trend line, though subjective, is right in this area. Also, NIMO is at extreme, so we want to keep an eye on stocks. Give it a few minutes before you jump in feet first. All right, there goes Amazon. Amazon is ripping. Amazon going.
Let's shift the tack. TD Cowen with a bullish note on Qualcomm. Shares up about 9% today, but it's been a pretty upbeat November so far. Shares up about 10% this month. What does TD Cowen say?
Okay, give it a few minutes. It's only 9:42. Algo's taking care of imbalances. I wouldn't get in the middle of this right now just yet.
Shares up about 0.5%. Meanwhile, more bearish commentary on Fortinet to start the week, including another downgrade. We saw quite a few of these last week. Shares down about 1% right now. They fell 10% last week. Fill us in on this downgrade.
Okay. All right, Apple flagging. Amazon still going. Amazon looking good. Okay, volume looks good. RSI's higher. We do have stochastics starting to embed, so that's the only issue. Somewhere between where we closed on Friday and the highs. Maybe we grind up there this week. Snowflake pulling back $3. Snowflake. Tesla giving back a bit. It was up 4. It's now up only 260. Google holding on. Amazon still going. Microsoft looks strong. Microsoft looks really good, by the way. Microsoft. Okay, trending. Look at stochastics and RSI. Look at the volume and RSI. MACD. Okay, you got over 120 million shares trading hands over the last 6 trading days. That's pretty awesome. I think they want Microsoft Microsoft higher. Okay, Microsoft still going. Amazon going. Apple looks like it wants to go some more. Tesla fading a little bit. Strongest stocks on the FANG index, 10 stocks. The strongest: Microsoft, Google, Meta, Amazon, Apple, and Nvidia for now. Weakest is Snowflake. Netflix is flat to green. Netflix flat to green. Tesla's up $2.30. It's off the best levels of the morning session. We're only 16 minutes into the trading day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com, just monitoring the markets, giving you the play-by-play. S&P is chopping around. We're not expecting big moves in either direction this week. As we trade into positive gamma, volatility compresses, more mean reversion. There goes Apple. Apple going. Apple going. Follow through day on Apple going for 180. Apple's still going. All right, we're fading. FANG stocks are not agreeing. There's a couple that are pulling back. AVGO is off $5. Snowflake is off 3. Netflix is flat. The rest of the FANG stocks look fine. So expect more choppiness. Microsoft, a little pullback. No big hurry to buy anything at the moment. Okay, give it a few minutes for the markets to settle down, get a true direction. Remember, we did close right at resistance on Friday. Okay, it's very possible to get rejected, pull back again. Being it's the seasonally strongest months of the year, November, December, I would anticipate that eventually we're going to follow through But we had a really strong week. I don't need to tell you. Very strong week. Starting off Monday, reversal. We got a stochastic fire to the upside, just like previous occasions on these verticals here. Okay. Which led to follow throughs that lasted at least a week, week and a half. We've got the week so far. Do we follow through? All right. So we won't know until we see what institutions are up to. For starters, we'd like to see the New York FANG index and these 10 stocks move higher. Okay. We want to see all these green. So far, we've got 3 red. Okay. 3 red, 7 green. So that's a good start. I mean, I'd like to see all of them green, but Apple's still pushing higher. Apple looking pretty strong. Okay, Apple. Okay, Apple clears. We're clearing Thursday's price action. Apple. Apple clearing levels. Okay. All right, Apple trying to clear some levels. All right, Amazon. What is the semiconductors doing? Semis, like to see semis on the move. SMH. Okay, so that's consolidating. All right, so that's not surprising. SOXL. Let me see what sectors are the strongest. Okay. Let's see what sectors are strongest. Survey says 60% red, 40% green. Sectors crude oil, pharmaceuticals, utilities, consumer staples. All right, so they're already starting to, at least they're starting off with a bullish look, or excuse me, a defensive look with healthcare, utilities, and consumer staples, healthcare, consumer staples, utilities. Those are defensive sectors. Consumer discretionary is higher by 0.2%, not a big deal. But all of the sectors we'd like to see bullish again this week are red at the moment. That can change. Watching the FANG stocks, New York FANG index stocks, there's 10 of them. So far, we've got 2 red, 8 green. Netflix is flat, so it's really 7, 1 unchanged, flat, and 2 are red. Snowflake and ABGO not having a good day so far. Apple, though, pushing higher. Apple doing its deal. Apple looking good. Let's see, Apple. Let's see what the weekly looks like. Apple weekly. Okay, back above the 10 EMA. That's a good start. Okay, we got above the 10 EMA last week. Earnings are out of the way. Everyone had their opinion. Now let's see what price action tells us. Okay, if price action is bullish, we'll know it pretty soon. If we keep pushing away. Microsoft also grinding away. Microsoft looking pretty strong. You know what I think about Microsoft? I thought that this would continue last week. It did. We cleared this 346.20. That's a major deal. Okay, RSI is pointing higher. It's not turning yet. And the volume, that speaks to you, right? Volume is showing institutions' footprint. So although I don't want to buy the highs up here, if you're not in a position to profit from Microsoft, I would wait for the next. More than likely, we'll go to pull back to the 9 or the 5 EMA, unshown. I'm not showing the 5 EMA, but 9 EMA, a pull back to that this week. Or, watch your intraday. Okay, so right now, we got VWAP. We're right at VWAP. Bollinger Bands. Look at the Bollinger Bands. You see the lower one turning? That's telling you look for a grind higher. Okay, so look for a grind. Maybe a little dip first. I would wait until, I don't know. This is a nice little dip right there. If it does get going, Microsoft could follow through. All right, Apple doing its thing. Volume, look at the volume. Relative volume looks good so far on Apple. Okay, starting to flag again. Microsoft. Meta also looks pretty good. Look at Meta. What we want to keep an eye on is the 10 and 20-year yields. Those are moving higher. Okay, last week we talked about, and in the weekend video, we talked about junk bonds. Okay, we had gap ups. Now we're flagging. If you're just new to trading and investing, you always want to keep an eye on junk bonds. In the current environment, you want to keep an eye on the 10-year yield. That bounced at the 50-day. Okay, so shoot, I don't want to do that. I want to do this. All right, so we bounced at the 50-day. We want to see that momentum carry lower. Now, if this was a stock and you saw the 9 and 21-day crossing over, bearish direction, you'd anticipate that we might bounce, but that the momentum will carry us lower. Watching RSI and indications, stochastics, MACD, both turned lower. Okay, AVGO is starting to bounce, so shorts are covering. Apple looks like it wants to go. So does NVIDIA and Microsoft. Watch NVIDIA and Microsoft. Apple, those three look like they could go. That's about, 15% of the weight of the S&P in those three stocks. Okay, so let's go look at the number of stocks trading above the 50-day. They'll tell us exactly what we need to know. Is it flagging? Yes, it is. Okay, so we hit 50% of stocks above the 50-day. To start last week, we were about 15 to 18%, and we took off to the upside. That told you what you needed to know, that institutions were buyers. Same thing with the 200-day. So right now, we're just sitting here. We should just sit here and watch. If you're in Apple early, maybe you're day trading, Apple, Amazon. There goes Meta breaking higher. Microsoft, Google looks good. I'll tell you what, this looks pretty good right now. Markets look pretty good for a pop. Okay, although we're flagging, not surprising, we're flagging. We need to get above this pivot right here near the S&P equal weight index. These 10, 15 stocks, all right? These 15 stocks, keep an eye on them. All right, so we need to get above this pivot. If we do, that means we'll be above the 50-day. The 200-day would be next. All right, S&P 500 looking pretty good. S&P. Okay, we cleared the 50. We cleared the 200-day. 9 and 21 are now. This is the exact opposite of the 10-year yield. Okay, S&P 9/21-day turned up and back above the 200-day. Price is above all the moving averages. Yes, we are a little bit overbought and consolidating right now. We could consolidate between the 50 and the 200-day. So you really don't have an edge at the moment. You'll only have an edge if we do see a follow through and all these FANG stocks continue higher. Okay. A little bit too early to tell. It's 10 o'clock on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Monday the 6th, the first full week of November trading. November and December are seasonally the two strongest months of the year. So we have a lot of edge for the bulls. Okay, this time period between October 1st and December 31st. On average, over 20 years, 25 years, we're looking at a 32 to 33% potential gain during those weeks. Now, we know that October sucked, and we didn't get anything going until the end of October, early November. So we lost a couple of weeks. Now we're into the second 2 weeks of November. So far, looks pretty good. And we're at resistance. So bulls got an edge. All right. The bears had it since July, since the peak at 46.07. 3 months down, 2 months up. Sounds good to me. 3 months lower. I think it's time for the odds to shift in the favor of the bulls into the seasonally strongest months of the year. What do you think? You guys think so? I think so. All right. Yeah, I believe Apple is one of Ziggy's largest holdings. I know at one point, your average was 130. Ziggy, if you're listening, cool. Okay, so we're still chopping around. The FANG stocks, chopping around. Apple, Amazon, all of these look like a little bit of profit taking at the moment. Okay. Let's see. S&P. Wouldn't be surprised to see it just sit in this area for a little while. A doji. Let's see what the up volume looks like. It's 2-to-1 down volume on the NYSE, 1-to-1, 1-to-1 on the Nasdaq. So that's telling you what you need to know so far. 1-to-1 up volume, down volume. Nasdaq. Look for a doji on the Nasdaq. The Qs. Okay, look for a doji. Doji. Okay, we're sitting right on top. The 100 period, the magenta colored line is the 100. The 50-day is green. The 200-day is down there at 340. The dotted line is 340. That's the 200-day. 9 and 21-day at 360, turning up. So if we do get a little bit of a pullback, I'm not expecting much. Not expecting much on the downside from here. FANG stocks holding up fairly well. AVGO and Snowflake are the only red at the moment. So we got 8 of 10 green. 1 of those 8 are unchanged. Netflix is just sitting here. Nvidia up $6, $5.80. Meta's up $1.26. Amazon's up $1.37. Apple's up $1.65. Microsoft up $3. Google up. Google's flat. So Google and Netflix are pretty much flat on the day so far. Tesla was up 4. It's giving back some of its gains. Apple hanging on to the highs. Relative volume pretty high on Apple. All right, what's this CVM? Looking at dark pool, CVM. Dark pool activity, CVM. Yeah, that's what I figured. Yeah, I remember that. Okay, cool. See, I have a good memory. CVM is a $2 stock. And it's got a lot of volume. A lot of volume. $2 stock. Okay, so Sony is the leader for now in volume. Sony that pulled back. VRTX breaking out. VRTX breaking out. Let's see. EW, Edwards Life Sciences. EW, Edwards Life Sciences. We got healthcare. EW. EW, high relative volume. High dark pool. Check the daily volume on EW. We got dark pool volume on EW coming off the lows. ATR is $2 and change. It's currently up at 67 cents. All right, so the FANG stocks look like a little profit taking there, but Apple's starting to gear up again. So is Amazon. Amazon's above 140 now. Let's go take a look at Amazon because this level at 140 is a big deal. As far as point and figure is concerned. Let's see, point and figure. Go. Amazon. All right, so 140. We get through 144, 142 through 146. We're on a buy signal. You can see that X. That's not my imagination. That's a green X. Okay, B stands for November. So that means it's breaking. It's giving us a buy signal in November. Amazon. It's a bit extended at the moment. Cadence design also looking pretty good. Cadence with dark pool volume. Cadence design Looks like it wants to go. NRG. NRG. This is one that Tepper likes to buy from time to time. NRG getting extended. NRG. Mhm. Yeah. Yeah, I would agree there, brother Bill. Mhm.
This afternoon for a preview, let's bring in senior markets correspondent Kevin Green. Kevin, there's been quite a bit of optimism so far in November ahead of these results. S&P up about 6% in November. A couple days of trading. What do you think?
All right, so Amazon looking good. Okay, so grinding along. It's got an ATR of about $3.50. It's up $1.46 at the moment. Probably not a bad idea to wait. Amazon. Maybe it pulls back a little bit. A buy right around 139, 139.30, something like that. Watch for that. 139.20. Pull back to breakout level on Friday's price action. 139.50 over here at the open on Friday. Maybe. Let's see. Amazon. All right. So S&P pulling back a bit more. Okay. Okay, Apple. All right, the 10-year bouncing off the 50-day. Friday, Apple pulling back a bit. Okay, tick cumulative is the fast signal starting to cross on the 1-hour chart, which is telling us to be neutral to slightly bearish at the moment. We're at resistance. So Apple. Apple. All right, so we've got 5 of the FANG 10. 5 of them are lower. Tesla giving back $4 from this morning's gains. SPY pulling back, giving back some of the morning gains. Futures are flat at the moment. Snowflake off $5.85. AVGO, Broadcom's off $7.68. Leading sectors are defensive, utilities, healthcare, consumer staples. We start off the week, we're always taking the temperature and seeing what the markets are going to do, which direction are we going to head. Still kind of early. It's only 10:15 on the East Coast. Netflix pulling back a bit. Okay, Apple. Microsoft looks like it wants to break out. Watch Microsoft here. Microsoft looks like it wants to break higher. Okay, there goes Microsoft. Okay, we need Apple to pick up the pace here. Sitting on top of VWAP, Apple.
Low tick alert minus 800.
All right, New York FANG index. We know that we're right at resistance on Friday. Trying to get through this area. We're at a doji right now. 1.7 to 1 down volume at the moment for NASDAQ. The tick cumulative fast signals turning a bit bearish at the moment. So we really need the bulls to step up. Seasonally, one of the strongest months of the year, together with December. That said, we did have quite a week. All right, shorts covering. Microsoft trying to break out here. Microsoft trying to go. Microsoft about to go. Microsoft's trying to go. There it goes. There goes. Squeeze. Squeeze. Microsoft. Lilly. Looking good. I like it. There goes Microsoft. Okay. Nice reversal. Still not out of the woods. We need to see more of this buying volume. Bitcoin above 30,000, 35,175. What's Coinbase doing? What is Coinbase doing? I know, Steven, you're in Coinbase, right? I have Coinbase shares. Just waiting for this to continue higher. All right, so we hit 88 and change on Coinbase. Bitcoin. Bitcoin. All right, so that looks okay. Let's look at the daily. Bitcoin still grinding, 35,000. Okay, the weekly on Bitcoin. Okay, so starting to lose a little momentum here. You can see the candle's getting smaller. Okay, so we were looking for a consolidation last week. We got it. Did we get a break higher? No telling. Microsoft trying to push higher. Not yet. Google's starting to bounce now. Meta's trying to bounce. Meta Let's look at Meta consolidation for the last 8 to 10 weeks. Meta.
Down 30% just in the last week or so. So a lot of positives. And you talked about earnings in the previous segment. 80% of earnings have come out on the S&P, and 80% have beat their
Yeah, I was thinking about that this weekend. You know how CNBC and Bloomberg, everyone was saying, oh, it's going to be terrible for earnings, because of a recession that's looming. And yet all these companies beat. So what's the moral of the story? Do you even listen to these knuckleheads, talking heads? I mean, they were wrong on supply chain for, a good part of the time. Yeah, there was some issues with supply chain in the beginning, but that quickly changed. Their narrative stuck to the same script. The narrative that the Fed raising rates would continue to put downward pressure on the markets. That didn't happen. We continued to, well, for 3 months, yes, we did push lower, but eventually, coming into this month, November, December, we are moving higher, and earnings look pretty good. So stocks move higher because of earnings. That's the driving factor, and sentiment, of course. All right, Meta's breaking out. Meta's breaking out. Meta's breaking out.
That's going to be very much a positive and a catalyst for a push to the upside.
Are you bullish on AT&T because it has seen it's up about 2.3% so far in November, but down 15% in 2023. What is your trade there?
Well, I'm bullish in the fact that I've got a lot of indicators that have lined up here. And it's risk reward. I trade what I see. And it's more risk reward. This stock is down here near a 30-year low. It's 30 or 40% off its 2021 top. And in the last 52 weeks, it's down 13%. So 13 is a key number for us today. Lucky 13 is down 13% in the last year versus the Dow. It used to be a Dow stock. It trades like a Dow.
Okay, what are biotechs doing? Meta going. Okay, we got Tesla turning. Tesla starting to turn. Okay, let's go to the shorter time frames here. 2 minutes. Okay, starting to turn. Okay, Meta, Amazon. Okay, trying to break higher. Amazon. Volume looks pretty good. FANG stocks. Starting to see shorts cover on Broadcom and Snowflake. Okay, Amazon's about to go. Amazon going. Breakout. Amazon's breaking higher. Okay, Amazon. Can we do it? Let's do it. All right, market's back up to the high. Tight price action, 1-to-1 on the NASDAQ, 1-to-1 up-down volume, 1.4. Tick cumulative is telling you to be a bit more cautious. So instead of taking 10 new positions, maybe you take 1 or 2. Look for a follow-through. Apple, no follow-through yet. 178.75, stop the price. Meta is the high of the day. Amazon, try to break higher there as well, along with Microsoft. Okay, let's go see what else is working. We do know that we have healthcare, utilities, and staples strong today. All right, so this is what it looks like, the markets right now. So stay away from real estate. That was hot last week, so some profit taking most likely. Tech looks okay. There's a good mix. Only the big cap tech are green at the moment. Amazon, Tesla, communications, you got Google, Meta. Healthcare looks pretty good. Lilly is up over 3.6%. Lilly. Financials are mixed. You got consumer staples look pretty strong. Consumer staples, Walmart, Costco. What does Target look like? Target's a good candidate for maybe a buy right. Maybe you sell the 115 call, buy some shares, capture some premium.
So how do you handle water resources in Arizona that would be different from, say, elsewhere in the country?
Okay, I got to take a couple minute break. I'll be right back.
Metropolitan area here in the desert Southwest. So our company is about 20 years old, and I think that's important because not just it's still fairly young from a regulated utility perspective. If you consider the other 10 publicly traded water companies, they average over 100 years old. So we're only 20 years old, so we're really just getting started, and not just because of our age, but because of what we do and the areas that we deal with. So the idea behind Global Water was to go to emergent areas around Metro Phoenix, areas that were just starting to grow, and really with that greenfield opportunity infuse what we call total water management. And so that's a concept that we created, which is really integrating water, wastewater, and recycled water utilities in the same geographic area so that you can maximize the use of recycled water. We also really leverage advanced technology. And when you put these things together, including with like smart
I'm going to grab a cup of coffee. I'll be right back.
smart incentive programs, the idea is to really drive down the per capita demand. So you're stretching those scarce, valuable water resource supplies that you have to the fullest extent possible so that you can continue to allow communities to and it benefits them from both an environmental and an economic perspective. So we've had a lot of success with that here in Arizona. We're experiencing a investment boom here over the last 3 years. Arizona has seen about $50 billion of economic development investment. And put that in perspective, that's about 500% or 5 times what we saw in the 3 years prior to that. So there's lots of going on here in Metro Phoenix and Arizona. But as that happens, you really have to integrate your utility systems and do it in a very thoughtful way so that we are also managing that scarce water supply to the fullest extent possible.
Okay, I was taking a look at some of the stats and the graphics. You serve 74,000 people in 29,000 homes. So I'm curious, how does the higher interest rate environment and what's going on in the housing market impact your company?
Yeah, it's interesting. We're definitely got a big pullback in our stock price. Utilities in general don't perform well when there's high inflation because there's a thing called regulatory lag in our ability to actually increase rates to deal with those increased expenses and costs of capital. But we're also kind of a trade to treasuries. And so as they go up, we go down a bit. So there has been a pullback. But from a business perspective, we really haven't seen a big impact. We're having the best year that we've ever had. We're about to announce Q3 here just next week in our earnings release. And our business is really strong. Again, it's based on kind of the original idea to target these emerging communities outside of an area like Phoenix, which has historically grown 3 times the national average, and it continues to. Sure, single-family housing has pulled back a little bit, but there's still so many people moving to Phoenix. It's just kind of moving from single-family housing to build for rent or multi-family type living projects. And so, we're actually seeing an increased amount of those. So businesses are still moving here, making the investments. Population is still moving here, and they need places to live, work, and play. And so, from a business perspective, we're
or having one of our best years ever. Just our stock price doesn't reflect that because of the macroeconomic stuff going on. But again, we're just getting started. We're 20 years in here, and these areas are going to continue to grow for the decades and decades to come. And what we do, providing the utility service and managing the water resources that allow that to happen, is more important than ever.
All right. So as you said, you report third quarter earnings later this week. We just saw some of the estimates from Wall Street flash on the screen. You talked about the stock price being under pressure. Does earnings change that when you actually report?
Yeah. I mean, I think ultimately it's going to be a good quarter, and it's been a good year. We're still fighting those pressures, but as you were talking to the prior guest about, you're starting to see a little bit of change in that. Inflation's under control a bit more. Looks like interest rates may have topped out to a degree, and there's some people that are bullish. And I think as it turns, the areas and the businesses that have continued to perform really well, like we have, and the Metro Phoenix area that we're located, I think they're going to respond fairly quickly. So, I think it's a good buying opportunity.
All right, Ron Fleming, President and CEO of Global Water Resources. Thanks for shedding some light on your company. Really appreciate it.
Thank you. I appreciate it. Have a good day.
You too. All right, coming up, it's time for the Chartmaster. We'll preview more earnings, Celsius, Datadog, and D.R. Horton. That's next on Morning Trade Live. Stay with us. We'll be right back.
I remember when I first started flying, and we would experience turbulence. I would watch the flight attendants. They're not nervous, and I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
I'm Nicole Pedalides, live from the New York Stock Exchange. Catch me on Schwab Network anytime, anywhere, on any device for free. Schwab Network.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Welcome back to Morning Trade Live. It's time for the Chartmaster. Renita Young is back with us to take us through the fundamentals, and Kevin Green is also back. He'll take us through the technicals. Renita, Kevin, welcome back. Renita, let's start with you and your first stock you're talking about. That's Celsius. Shares basically flat right now, heading into results, but up 15% so far in November. What are analysts expecting for Celsius earnings, Renita?
We're expecting another great quarter for Celsius. Of course, this company has blazed through as being innovative in marketing, as also having a really diverse product set of it, not just with drinks, but with protein bars and also with superfoods as well, and expanding into other markets. But analysts are expecting adjusted earnings of 51 cents. That would be a significant rise from last year, almost 170% year-over-year rise from when Celsius reported a loss of 73 cents a share. Now, revenue is expected to come in at $348 million, nearly an 85% increase year over year. One analyst jokingly calls this a hated stock, but that's up big, up more than 120% from its yearly intraday low so far. And its growth continues to defy gravity, as one other analyst puts it. But it's also got that distribution relationship with Pepsi that helped it surge as well. And recently, Celsius announced a 3-for-1 stock split that'll take place on November 13th, Caroline.
All right, wow. A heated stock that's up, as you said, 102% over the past year, 68% year to date. Kevin, what technical levels are you watching? See anything to hate about this name?
All right, so fresh coffee, all is good.
Areas of interest that I'm going to be keeping an eye on. And first and foremost is going to be this positive momentum that we've seen to the upside post earnings. You can see that at point A. They have been able to beat on both the top and bottom line. We see the market coming in and buying up the shares. And then the stock actually trades in this ascending channel to the upside, which is very bullish, keeping that upper end intact as well as the lower end support area. Now, we did see that happen again. And we did see it actually try to break to the upside here. But we are now seeing at point B a little bit more of a neutral or consolidation type of channel. This is not bearish. This is not bullish. This is more a neutral situation. The upper channel is at $176.25. The lower channel is at $151.45. We have broken the upper range in the intraday trading session here today. Let's see if it's going to be able to regain that. But point C is going to be the biggest area that I'm focusing on here. The recent move to the upside we have seen on very large volume, which means that there's a lot of conviction in this name. Not a lot of short selling in this name either. So these are long buyers getting into the stock. If we do hear some really good news when it comes to this earnings announcement, it does have the ability to break out of that channel to the upside here and try to retest some highs.
Yeah, median price target's 209, but implies quite a bit of upside, at least according to Wall Street analysts. All right, Renita, back to you. Let's talk Datadog. Different story for Datadog. It is up year to date, but only up about 10%. It reports earnings tomorrow as well, tomorrow morning. What's the street looking for Datadog?
The street is looking for growth to slow, although it's still going to grow, but that's likely why shares have taken a breather today, because that same excitement that was last year in this quarter is not expected to be as robust as this quarter. Nevertheless, the revenue is expected to rise about 20%
All right, Apple trying to push higher after a little dip. Back to VWAP. Apple's looking good. All right, looking for the FANG stocks to start moving. Apple, VWAP up and to the right. Looking for Apple to push away. Let's take a look at Apple earnings. Okay, Apple beat expectations. The previous quarters, they, didn't have as much in the way of sales, iPhones, etc. Earnings growth 13%. Expectations, they pretty much flat, and revenue actually fell. Interesting. Very interesting. Microsoft. Okay, that looks good. Netflix. All right, Snowflake is trying to go back towards Friday's close. Apple's pushing a bit higher now. Apple. Looking for Apple to continue. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, first full week of trading in the month. And it is 10:38. 10:38. A little bit more than an hour under our belt. 1-to-1 up-down volume on the NASDAQ. New York FANG Index. We've got two that are off a bit more than $4. Snowflake and AVGO off 7 and change. Netflix is flat. The other FANG stocks look fine. NVIDIA is up 5. Meta is up 3. Amazon's up 2. Apple's up 2. Tesla's gave back a lot of its gains. It was up over 4 pre-market. It's now turning back up towards VWAP and could continue. Microsoft is up $4 in a squeeze, looking for a breakout on Microsoft. You might want to try Microsoft. There goes Apple. Apple pushing higher. Yeah, always.
Yeah, I think the chart is really at a 50-50 stance when it comes to either breaking to the upside or having a break down here in the near term. And this is the reason why we actually saw a nice little run up over the year here because of the fundamental landscape that we're seeing when it comes to movement down. And we actually tested this area or this range around 102 to 1.
There goes Apple.
Kind of like the value range. It's a previous gap area.
Yeah, I agree with you, Corey. Target. I love the look of the stores, nice and clean. For the most part, always got stock on the shelves. No empty shelves for the most part. Store layout, store signage, store design, all very top notch. Bright, bright and clean. Lighting is always good. It's unfortunate they had this issue with being too woke, you know. All right, Apple. You know, I kind of, as far as being woke is concerned, it's kind of like me being a trader and trader, not traitor. It's kind of like me being a trader and saying, if you have a differing opinion, that I, excommunicate you from the trading room just because you have a different opinion about where the market's going to go. Even though I have experience, doesn't matter. We all have an opinion about the markets. Not that that matters, opinions, but we're watching the markets. What the hell is he talking about? I have no idea. Market's pushing higher. I'll get off that subject. Apple's still going. Apple breaking out. Apple's breaking out. I like to get away from opinions as far as, that most of you that have been around a while, that I don't have an opinion about the market. I'm very much tuned into what price is saying, where the money's flowing, why is it flowing there, and in what quantities. Is it enough for us to pay attention to? Yeah, that's what we should be paying attention to. So here's the New York FANG index from last week's performance. I mean, this is very clearly telling you what you should be thinking. All right, price action is not turning back down. We closed right at resistance. Okay, several layers of resistance. You got the 50-day, you got a trend line, you got a previous pivot, all in the same area. Now, some of the developments under the hood, if you're not paying attention, the S&P call wall shifted up from 4350 up to 4400. That means that institutions are lifting the ceiling. They're literally allowing price to move a bit higher just by the way they're positioning. The reason why that matters is because you got dealers hedging against these positions, and so far looking pretty good. Now, we do have this 4393 area resistance overhead. We got several layers up there: 4376, 4380, 4384, 4389, and 4400. That's all a little ticker tape in the bottom of the screen. You can see that as well. Apple, nice move on Apple. Looking good. Okay, Apple pushing higher. Snowflakes turning, shorts covering, Tesla turning, Amazon at the high of the day, Meta at the high of the day, Google just off the high of the day. Apple pushing a bit higher. Apple. All right. We said earlier that the temperature in the market was mostly cautionary. Okay. You can see real estate was pretty hot on Friday, Thursday, Friday. Actually, the whole week, real estate looked pretty good. Interest sensitive names, builders. Let's see what the builders look like this morning. XHB, builders. Okay. Inside day, we're just taking a break. Okay. All right, more chop. All right, Disney reports on Wednesday after the close. Wednesday after the close, Disney. ARM Holdings. Hanging in there, ARM. All right, chop. All right, so builders take an inside day. Apple. Microsoft looking good.
Most short positioning on hedge funds that we've seen on treasuries in basically 15, 16 years. So it did seem like, from a trader perspective, everybody was on the same side of the trade in the hedge fund space. They were all short treasuries. Got that announcement in terms of the funding, and then from what we saw later in the week with the Fed announcement getting a little bit more dovish around maybe some concerns around credit tightening. And then finally, at the end of the week, when we had the jobs number come in below expectations, all of that, in my opinion, kind of led to a little bit of a short squeeze pushing treasuries up.
Microsoft looking good.
Themselves pushing them up, pulling yields down from the 5% that we've seen.
Microsoft
4.5, now we're around 4.6. So you saw that big move down.
grinding higher.
Gave a little bit of a rocket fuel, if you will, to the equity market, and you saw S&P's rally be, around 5.5% last week. And I think when you look at the sectors where the majority of the bounce came, real estate, right? Utilities, financials, and some IT, some of these interest rate sensitive sectors did the best. So I think that kind of lends some credence to that story.
I want to ask a quick follow-up, and then I want to bring in Nick Theodorakis. It's 4,400 on the top side of the range, which doesn't imply much upside from here. So you don't necessarily think that this rally has legs.
It's not that I don't think it has legs. I just think that you've already had a 6% rally from the bottom, right? I mean, so yes, there is some seasonality in November where this thing could move up from here, but we got to think about what the catalysts are, right? We're lining up for the end of our earnings season. So far, it's been pretty good. We got about an 80% beat rate on the earnings. The revenue, though, the revenue's coming a little bit light, so we're only around a 62% beat rate on the revenue from the
A nice little bounce. Okay, looking for a follow through. What's Apple look like? Apple looking for a higher high. Higher low printing. Looking for a higher high. Look like a little profit taking there.
Setup for Q4. Now, that being said, the expectations for the markets and the earnings season coming into Q3 was for a drawdown of around 3.5%. We're actually up about 3.7% in terms of our blended year-over-year earnings growth on the S&P 500. Those are all positive. I'm just, my question is really this: how much of those positives have already been priced in?
Okay, so Lilly, not giving a whole lot. It's continuing higher. Looks pretty good for 52-week highs. Novo Nordisk pulled back. That gapped up. Okay.
Could be some pretty big resistance there, but another 6% from here is basically back to the highs that we saw earlier in the year. S&P future terms 46, 40 roughly. So I think we're a little bit in no man's land. And can we rally into the end of the year? Do you see sort of that FOMA trade coming back on with interest rates theoretically at least flatlining from a Fed perspective? If that continues to be the belief, and we hear more of that this week, there's not a ton of economic data, but tons of Fed speak. If they continue to tell that story, I think that is the biggest driver in the short term. And you could see some of the
okay. Still more chop. S&P chopping around. Okay, 43.76 is a level. 43.76. Whoops.
Some of the inflationary pieces coming off. Oil's up today, yes, but only 81 right now.
And 43.80. 43.80. Excuse me. Today's resistance levels are still overhead. 43.80. Excuse me. S&P, just a flat VWAP, very tight price action, which is what we're looking for this week. Okay, let's look at the watch list real quick. See how the watch list is doing. Most of these stocks look good coming into the week. You rank these by performance. Knife River. Knife River with a lot of dark pool volume last week. Knife River breaking above 54. Nice gap up today. Don't chase it. Maybe you get an entry off of VWAP. Knife River, though, very strong. Eli Lilly. Now, Knife River was one of the extended watch list stocks. All those stocks at the bottom were from scans on the watch list. Eli Lilly, of course. MACD about to cross, stochastics. Stochastics, plenty of room. And RSI.
Just go either way, right? If we get a surprise increase in jobs next month, I think you could see a real concern that there's another hike on the table. What if things are really bad? What if we actually see like a real
All right, Eli Lilly is on the extended watch list.
bad news again? So there's some cloudiness out there, but I think it's really going to depend on jobs here. There was some stuff out over the weekend I was reading around kind of the dry up in private equity. There's slowing and kind of contracting in a lot of sectors and a lot of industries.
A lot of the security names also.
But I think it's really going to depend on jobs, and if that slowness continues and stays relatively flat.
IBD identified Lilly as a stock that funds are buying. Eli Lilly looking good. All right, Lilly. Lilly, in its most recent report, beat earnings, revenue growth of 36.84%, beat consensus estimates by 225%. Company beat by estimates by 225%.
No overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Yeah, we need to see biotechs on the move. We had a nice bounce last week. A little bit of a consolidation today. Two steps forward, one step back. We're looking pretty bullish week previous. IBB and LABU and XBI, they all popped nicely off the lows. Huge volume last week. IBB, XBI, LABU.
Example trades and stock-specific analysis featuring the smartest minds in the business.
Okay, that looks good. All right, Apple's still going there. Still range bound, flat VWAP. That's what we're expecting today. We're expecting tight price action. As long as we stay in positive gamma territory, we should expect to see mean reversion, pinning action, and not much volatility in terms of price highs and lows. Eli Lilly looks good.
There's no fear of missing out on Next Gen Investing. Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. Peace out, coffee. I'm Jenny Horn. Join us for Next Gen Investing, 1 p.m. Eastern, only on the Schwab Network.
Schwab Network's like no other financial media you watch because it's all markets, all the time. It's 100% finance. We look at everything as traders, investors. Everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time, relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
All right, Apple.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim. With robust charting and analysis tools, nearly endless customization, and up-to-the-minute news and insights.
What's Starbucks doing? Starbucks we looked at last week. Had a lot of volume. Starbucks still looking good. Starbucks above 100. What's Nike doing? Nike as well. And what's McDonald's look like? McDonald's pulled back. MCD. McDonald's looks good. McDonald's follow through. What about? I don't want to do that. I want to do this. All right. McDonald's, nice follow through. What else was looking good? DRI, Darden Restaurants. Okay. Inside day today, hit the 200-day and stopped. Okay. I had some put credit spreads. I took those off a few minutes ago. Darden. All right, what's Disney? Disney still pushing. Apple still pushing higher. Apple. Disney trying to clear this 86 level. We got earnings this week on Disney.
These vehicles in Germany, according to reports we got out of Reuters over the weekend. Now, the source did not say this production would begin, but the car maker is closing in on an innovation that would allow it to sort of pass nearly all of the underbody vehicles in one piece, which would then in turn allow production to speed up and overall lower those costs. That is something that's huge, as their Berlin factory has had a few hiccups as far as its overall production goes. So another report we got out of that same actually factory in Germany, Tesla agreeing to raise its worker pay, raising its prices, a move that comes that could face some similar attempts actually in the U.S. according to the Wall Street Journal reports we got. But according to the report, the company will be raising its wages by around 12%, effective in November for its around 11,000 employees at its German plant, and will also pay a around $1,500 euro bonus, equivalent to around $1,600 US dollars. So we are seeing this, and again, not enough to move shares here, as Tesla is, I mean, pretty much unchanged, actually slipping into positive territory now, but here on the session. Okay, thank you for that. And also, Paramount stock moving to the downside after Bank of America downgrade. Tell me about that. So we're seeing Bank of America.
Okay, Apple, the Dow Jones Industrials, leaders. All right, looks good. Looks good. Amgen. Amgen looks really good. Amgen kicking ass.
Today, but the stock closed up over 20% last week today. So also pulling up names like Warner Brothers Discovery with it, Netflix higher on Friday. Again, I take this with like one grain of salt because again, I'm acknowledging the weakness, but this name closed up 20%. I mean, it just was ripping higher last week in response to the third quarter. Now, I will say, going forward this week, we do have Warner Brothers Discovery releasing Wednesday before the market opens. If this course it was any indication the way these two trade in tandem last week, that could be a potential catalyst now for Paramount, at least as far as this Wednesday goes. So we'll be watching what Warner Brothers Discovery report, if any sort of movement in reaction to that. All right, Jenny Horn, thank you so much. Great stories this morning, top stories that we're covering. Thank you. All right, let's get some insights on the news shaping the markets. For that, we recommend Ben Emmons is with us, senior portfolio manager, New Edge Wealth, to talk about
All right, so Apple doing really well here. Apple breaking another high. Okay, so we got a higher high on Apple. Apple looking good. All right, looking good, looking good. All right, let's see what the number of stocks above the 50-day look like. It was flagging out to start the day. Let's see what it looks like now. Still flagging. Okay, so that's a little divergence, if you will. That's something of a divergence. We're trading at resistance, so less aggressive. Maybe focus on one or two names instead of a dozen, because we are at resistance. We need to prove it. The markets, the bulls need to prove it. Okay, we need to see a follow through. So far, we've held pretty well. Apple pushing higher. Google, looking for a follow through on Google. Broadcom trying to get back to green on the day. Amazon up $1.68. Microsoft up $4.30. Apple looking good. All right, let me see. Apple. Money Magic levels on Apple. 177.50. We're through 177.50. All right, cool. Let's see. 177.50. Okay, so expecting this to be choppy all day around a flat VWAP. Okay, where's the other one? Apple. We've got 180. 180. Okay, Apple. Apple. What's Microsoft? Microsoft. Tesla's 225 and 230. All right, 225 is the next level on Tesla. Microsoft 355, 360. We're above 355. 360 is next on Microsoft.
I always put people before. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me.
Okay, Netflix is off $1.80 now. All right, that's not helping. Apple continues to push. Apple continuation on this push higher today.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Okay, come on, Microsoft. Nvidia's hanging in there. Nvidia's doing its thing. Nvidia's up $6. Looking good.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalini, live at the New York Stock Exchange. We had a great week last week. Every single sector was higher. Now what? Time for the big three. We've got pre-market trades. I'd like to find out how to do the chart to take us through the trades. Joe Hawthorne, CEO of MorningSnapshot.com.
All right, let's check out the US 10-year because that bounced at the 50-day. Now we're turning over. So let's go take a look at that real quick. If you're bullish equities, you want to see bonds, yields moving lower, bonds moving higher. Okay, a little profit taking. All right, so here is the 10-year. Okay, so what I'm seeing here is RSI drop below 50. 9 and 21 day have crossed and they're pointing downward. Price did hold at the 50 on Friday. MACD and stochastics are both turned lower. Can it bounce here? Sure. Preference, if you're bullish, you want to see this drop down below 44.80. That would help equities. In addition, you want to see junk bonds and high yield corporate continue this trek higher. Okay, so it's not pulling back, it's flagging inside. HYG junk also. You want to see that do well, along with IBB, biotechs. You want that to be higher. And you also want IWM, small caps, to be higher. Okay, now on Friday, I took an iron condor on IWM. I'm looking for price to stay between the weekly low and high. Okay, so with a condor, you're selling near the money puts and calls, and then you're flanking those puts and calls by buying out of the money call and out of the money put. The object is to stay in between price action. That's what I did on Friday for a credit $675. Where are you? IWM. Okay, so I'm looking for IWM to stay in this range. And this is basically an iron condor. So the numbers I'm using are a little bit lower, 160 and 155, and then the high is 195, 200. So the upper part is right. Let me just adjust this because when I refer to this, I'll be talking about that. All right, the 155 is the calls that I bought, the puts that I bought, and 160 is the puts that I sold, 195 and 200. All right, so that's pretty good there. 160. All right. So you sell the puts and the calls inside and then you buy the calls and the puts outside. That's an iron condor, and we're looking for price to stay in between. If it does anything like it's done since February, March of last year, it'll stay inside of this range. Apple's still pushing. NVIDIA pushing. Microsoft pushing. All right, so we've got about 15% of the weight of the S&P 500 on the move right now. Apple's still moving higher. So this is IWM. Okay, so I took an iron condor on this one. Sell the puts at 160. Sell the calls at 195. Buy the puts at 155. Buy the calls at 200 for a credit 675. And just looking for a price to stay in between. All right, so that's IWM. Let's take a look at what Apple is doing. 10-year yield, we want that moving lower. All right, we're at resistance, so this is a bit problematic for the bulls. A little bit of profit taking. Apple. I wasn't expecting price would just take off to the upside. Really anticipating price would stay in a pretty narrow range. That's what we have so far. Tick cumulative showing more selling than buying after a week of pushing higher. Apple still pushing. The call walls overhead at around 180. We're currently at 179.24.
This is an iron condor, so I'm also going to sell the 39 put, simultaneously buying a 38.50 put. All of those strikes expire November 24th. Trade of about 8 cents. My break evens are 30.92 and 45.08. So again, playing this range that we're in, to the downside right around that $39 mark, and then to the upside 45. So that's that bias, that neutral bias that I discussed earlier.
Next up, we're looking at Block, formerly Square. Your thoughts on this one? We've heard from the company recently. Now what?
Yeah, I think that we saw that it was getting
Apple's still pushing.
Just a lot of buying momentum here, largely due to what we saw around earnings. 52-week lows about 38.85. Right now, I do think that everything going on with Bitcoin prices going higher, we know that Bitcoin has been trading above that 34,000 mark. I'm not sure if they're still invested in crypto. I know that at one point they were largely invested in crypto, so that may be a narrative there as well for them. But also, I think right now with just so much optimism in the market, there may be some bullish momentum to carry this price a lot higher. So because of that, I am
Disney pulling back.
Feeling bullish on this one. What do you think? Is it oversold here? Square at 48.48 today? Ben?
Well, this is a stock that, much like Wells, has done very well over the last few days, but I think over the long term, this is still on a bit of a trend lower. Let's break it down. First and foremost, the more granular. The look at last week and the run up the strength we saw, right? A similar patterns we just looked at with WFC in this instance. Shares of execution 38.39 up to 53 and currently balancing right around 51. Let me show you some of the areas of consolidation that formed on the way up here. And you can see again, Nicole, this very high conviction trade, right, to the upside, the big vertical move up that we saw on Thursday into Friday, sideways consolidation. Now kind of leaking lower, not necessarily with the bulls.
All right, so S&P, choppy, right around VWAP, SPY, same thing, Qs. Okay, flat VWAP. So no momentum like last week. Got spoiled from last week's price action. IWM, flat Flat VWAP to slightly lower.
In this instance, as you take a look here, you're going to see that we actually had a bit of a double top that formed up here. This is around that 81.82 level back in the end of July, and then on the way down, areas of consolidation that formed at lower and lower levels here. And we've been currently balancing around 45. As long as we hold below 54, I think that bearish narrative is still intact. This big move up, you can see the significance thereof in terms of this range that we've been in, but you can also see how it didn't take out anything really significant that was established on the way down. This is that kind of random, rotational, that auction that we were just talking about in terms of WFC. Joel also called it consolidating or consolidation type phase, that horizontal type phase.
All right, so Apple at the highs. Call wall overhead is 180, 180. Recent highs on the second week of October, just overhead. Hope everyone's having a good day. It's absolutely gorgeous outside. Before, when I went to get coffee, I stepped into the backyard watching some players teeing off, and weather is just excellent. Sunny, hardly any breeze here in Myrtle Beach. Current temperature is 74 degrees. 74 degrees and sunny in Myrtle Beach. SPY looks good.
Okay. All right. Thank you for that. And last but not least, Amazon. When we talk about the Magnificent Seven, which ones are magnificent or not? Where do you think Amazon is going today?
I think right at the front of the line. I mean, I think that right now what we've seen here, going back to earnings here, and just a week and a half or so ago, late October, right around the 25th or 26th, we've seen Amazon just explode and just really go from, we're looking at about 118, 119, all the way currently right now to 140. I think this is a name that is really, if this bullish momentum in the overall market can continue, I think the narrative around Amazon and the Magnificent Seven that you mentioned, I think that narrative for bulls is strong if the upside momentum can continue. The 52-week high is 145.86. So I think trading 140, it is likely, in my opinion, that if, again, bulls can maintain...
Okay. Just being patient, starting off the week. We want a clear direction. We don't have clear direction at the moment. VWAP is flat for S&P. That's telling you all you need to know. You could see the high, you could see the low, or somewhere in between. So it's very narrow range. VIX is at lows. It's at 15. Volatility, sellers short on VIX are doing well. What's the dollar doing? NYMO hit 100 or 98. NYMO hit 98. It's currently at 62.93. The dollar 105.04, lower high. 10-year yields holding on to this level begrudgingly. The 50-day is just below, and VIX is at the low. We've got crude oil at 81 and change, off the best levels of a couple of weeks ago when we hit the 90s, 94, 95, something like that.
First and foremost, the double top that formed again. We're talking about up around 185, 186 last summer. Summer of 2021. Conviction of the downside. You can also see that we recently just failed out at this key area. 150 is significant on multiple levels. And again, if that turns into the top here now, if we start to roll over, well, we could be coming under pressure here. Take out 115, you open up the door for a retest of 81. I want to show you what's going on with 50 with the 200-day moving average. We're holding above both of them right now, but our RSI is very limited to the upside in terms of enthusiasm at this point, and from what I'm seeing here is a stock that's still running into some resistance here, again, around this area, 140, 145, 150 potentially, but yeah, stock that's short-term momentum upside, longer-term potential weakness still playing out.
Okay, thank you for that. Five thoughts and your trade here, Amazon.
Yeah, definitely bullish here in Amazon. Still in the 130 foot, simultaneously buying the 125 foot, both expired December 15th. Credit of around 68 cents, break even 129.32. Again, Nicole, as you mentioned at the start of the show here of this, phenomenal week. Very tough to be a bear here in the face of so much buying momentum. 5 straight days up, prices low, dollars falling. Bigger narrative is just bullish right now at the moment for Amazon and the Magnificent Seven, like you mentioned.
All right, thank you both so much for the big three today. Joe Hawthorne, Ben Lichtenstein, thank you both for being here. Really appreciate it. Kicking off the new week.
More chop. S&P going nowhere.
News that's been coming out about this one, a more affordable EV out of the German factory, even raising some wages too. More when 360 returns. We'll be right back.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
In-depth technical insights on every changing trend in markets. Available anytime, anywhere, any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Welcome back to Trading 360. I'm Nicole Petalides, live in New York City at the New York Stock Exchange for developing stories. I'd like to bring in Renita Young, senior market correspondent here on Schwab Network, to talk about some of the headlines that we've been seeing in C-suite changes that are notable. Good morning to you.
All right, S&P is still chopping.
That may have come to a surprise to some people, but the first one we see here that I talk about is an actual move happening over at Pepsi. The actual CFO, Hugh Johnston, is stepping down. He's leaving for the same role over at Walt Disney. And there has been news of who will replace him. It will be James Caulfield, who's currently going to become the executive vice president and CFO of the company. He will join, Johnston will join as CFO of Disney. So now he's been with the company for some time, and so has Caulfield. He's currently senior vice president of and the CFO of Pepsi Foods North America. He's been with the company for more than 30 years. But so far, the main news is PepsiCo CFO Hugh Johnston leaving for the same role at Walt Disney. We'll see how it goes. Then Caulfield will replace him at PepsiCo.
All right, thank you for that. And then we have earnings season. You're watching NXPI Semi?
Yes.
What's going on there?
Absolutely. So first off, we've seen the tech sector fall off a little bit this year, and semiconductors in particular have fallen off from that big bump that they made earlier in the year. So we can expect some sort of slowing in growth, right? Or at least some talk of it during this quarter. But so far, we're looking at adjusted earnings to come in at $3.58 per share on revenue of $3.39 billion. That revenue is expected to increase modestly from last quarter, slightly lower year over year. The adjusted earnings picture is expected to increase about 4% sequentially. And NFC in particular, while it's up more than 20% over the past 12 months, it is down about 19% from its yearly intraday low. So we'll find out just how this earnings report does this particular company.
All right, thank you so much. Great to see you. Really
All right, S&P just chopping around. Apple. All right, another higher low. Looks like a higher low. All right, let's check out what is still running so far. High relative volume.
They would have carried me out on a stretcher a long time ago. I've never personally owned the shares. We have a lot of Seaport clients that own the stock, and clearly they've done very well with it, including this year. And they are absolute
TripAdvisor. TripAdvisor with 5 times regular volume. TRIP. Okay. So TRIP. TRIP. All right, it's in a range. South Korea, EWY is seeing 2 times. You know what was really active last week? Egypt. EGPT, is it? EGPT. Egypt, very active into last week. If you look at the weekly time frame, Egypt made a breaking a downtrend. Egypt, you can see the connect the highs here, starting to break a trend. Anyway, with all that's going on in Israel and the Middle East, Egypt, interesting. Turkey, higher highs, higher lows. Even Russia, there was some talk about Russia. Let's see, where'd you go? World indices, RTSI. All right, so SPY pulling back a little bit. RTSI, the Russia trading system, RTSI index, holding up very well. Interesting. Let's see. Apple looking pretty good. Microsoft continues. All right, it is what it is. Okay, Apple fading a bit. Meta, Microsoft, no follow throughs, but it's up $3.90. We've got 3 stocks red on the 10 New York FANG index stocks. 3 are red, 7 are green. Okay, so we're just struggling at the moment for direction. We did have a nice bounce. We got a spinning top. We're at resistance. We're just above the 50-day. RSI has room to run. MACD stochastics have turned. Stochastics getting ready to embed, it looks like, but clearly bullish. Let's look at growth and value. Growth and value. These move back above the 10 EMA. Growth in the top panel, value in the lower panel. Okay, so growth turning. This is performance, growth versus value. Growth versus value. If it's moving higher, that's telling you growth is outperforming right now. It's sort of neutral. They're both moving. What else can I tell you? New York Stock Exchange. Let's see new highs, new lows. This is pretty interesting too. The McClellan volume oscillator. We got to extremes the beginning of October. We had a little Texas two-step, 2 steps forward, 1 step back. And now we're starting to push higher. Volume is starting to pick up again. Advanced decline, New York high low. Simple calculation, new highs minus new lows. Currently, we have 34 more new lows than new highs. Black line moving higher. We need to see a histogram stay above green, stay green above the zero line, like June and August, June, July into August. Okay, S&P equal weight. We know what the number of stocks trading above the 50 today looks like. Okay, a little flag at 50%. So it looks like we're going to take a respite here. That's the way it looks to me. We're not going to push higher. We're not going to drop off. We're at a positive gamma state above, what's that? Zero gamma is at, zero gamma is 43.33. 43.33. That relates to S&P cash, not futures. 43.33, right? Is that what I said? 43, yeah, 43.33 is zero gamma. Okay. 43.33. 43.33. So long as we stay up here, we're in a positive gamma area. And what that's telling you is when you're in the positive gamma area or zone above 43.33, we're looking for more narrow price action, which is what we're seeing on S&P. All right, so we're seeing very narrow price action, a doji, if you will. All right, so S&P cash, let me just put this on here. We want to stay above. You want to be bullish above 43.33 and bearish below. 43.30. All right, so I don't need this one. $43.33, and that's zero gamma. Zero gamma. Coordinates 43.33. Okay, so that's zero gamma. So long as we stay above these levels, potential to see resistance 43.76 and 43.80, but prices narrow, chopping around a flat VWAP. So for now, flat VWAP has the bias. We're just range bound. Everybody's trying to call something right now on social media. NVIDIA looking okay. NVIDIA. Okay, NVIDIA flat VWAP. So I wouldn't expect like a big move on NVIDIA. Apple. Okay, Apple still upward sloping VWAP, and we're between call walls. Okay, 180 and 177.50. So Apple could stay right in here and be fine. What's Bitcoin doing? Bitcoin's 35,060. Bitcoin. Okay, DraftKings was big last week. Let's go take a look at DraftKings, DKNG. DKNG. There we go. DraftKings. So best case scenario is DraftKings maybe pushes higher, but next you would expect to see maybe a flag in this area. RSI is rising. MACD and stochastics pointing higher. Volume was well above average Thursday, Friday. Looking good today. DraftKings. Insulet, PODD, that's for diabetics, right? That's flat. So looking at DraftKings, okay, you see what DraftKings looks like. Volume, MACD, stochastic, RSI, all says look for a flag. Let's see what else. Coca-Cola, seeing some activity. Coca-Cola. All right, that's flat. Planet Fitness, PLNT. Planet Fitness showing 1.6 R vol. Planet Fitness looks okay.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network. Welcome back to Trading 360. It's time for the disruptors. Kevin Green is with us, senior markets correspondent, to talk about what's
Perigo, P-R-G-O, Perigo, coming off the lows. When you're thinking about stocks that institutions might be buying going into November and December, maybe they're buying some of these stocks that pull back. This kind of reminds me of airlines. Airlines have dropped markedly since crude oil went, on a hell bent for 95 level, 100 level. That's right at the time airlines went the opposite direction. United Airlines. All right, some of these might be turning. I don't particularly like to trade airlines. I just want to point them out. Delta, United. I don't have really good luck with airlines. They're like Japanese. They're like, they're like Chinese stocks. One day they're up, the next day they're down. Let's look at some of these Chinese names like Baidu. Okay, you see this choppy price action? One day it looks like it's going to be really good. You hold it for a day. You say, it's probably going to continue higher. And then you wind up eating that and it pulls back for a week. So, moral of the story, if you try trading Chinese stocks, unless they're trending like over here in June, July, better odds if you make a nice profit and you swing it a day or you have it intraday, take the profit. Take the profit. They're moving sideways. They're not trending. Look at the weekly. Look at the weekly on Baba. Range bound. K-Web. Okay, what's working right now? XLP, consumer staples. Range bound, moving back to the top, middle part of the range. XLU, utilities. 3 weeks. Looks like 2 weeks of buying on institutions' part. 3 out of the last 4 weeks above average volume. That's institutions. Looking for it to get back to like 67, maybe 68 XLU in the next few weeks. So that's XLP, XLU, XLV, healthcare. Looks okay. XLB, materials. All right, taking a break this week. XLC, communications were higher earlier. Taking a break right now. XLE, energy was off last week. XLF. All right, SPY still pulling back. XLF. XLI, industrials. All right, so we had a nice week last week. It looks like we're giving back a little bit right now. XLK looks pretty good, though. All right, XLK. Okay. 11 a.m. Yeah, 11 a.m.
I remember when I first started flying, and we would experience turbulence. I would watch the flight attendants. They're not nervous, but I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through. I definitely feel privileged to be in that position.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market. weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close.
All right, SPY drifted a bit lower.
Earnings coverage.
Apple
Smartest minds on
in the upper part of today's range for now, below the call wall at 180. All right, there's really not much going on. Yeah, it was. Last week was crazy.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Oh boy. Flat VWAP.
Missed out on today's market headlines? Get caught up and catch the rest at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Bitcoin, not much going on there either. All right, so with a flat VWAP, you'd expect price to just keep chopping around. Chop around SP 500. Flat VWAP. Now we're going to bounce back up towards VWAP. That's what it looks like. Tick cumulative, that's telling you to be cautious right now. Tick cumulative, we got 2.8 down volume on the NYSE. The fact that we're seeing a little selling in the morning session is actually better. I would rather see selling in the morning session, quote unquote, amateur hour or amateur morning session. I'd rather see it in the morning than in the evening. If it came in at 2 o'clock, 3 o'clock, I'd be a lot more cautious. Right now, I'm just watching, going into lunch hour. Maybe we get a little bid in the markets. It's already 11:50. I can't believe it. Today has just flown by. NASDAQ 100. NASDAQ 100 is 50-50. Actually, more like 70-30 now. I just refreshed my NASDAQ 100. About 30 stocks on the NASDAQ are green. About 70 are red. 70 out of 100 on the NASDAQ 100 is red at the moment. Bookings, Regeneron, Vertex, Monster Beverages, Pinduoduo Duo. That's the top 5. Followed by Costco, number 6, Amgen, number 7, Apple, number 8, NVIDIA, number 9, and Microsoft, number 10. So 8, 9, and 10 looking good.
I would just say that its network advantage is not as strong as Booking Holdings, which we think has the strongest network advantage in the space, or Expedia's. We lean towards Expedia here. Going into the third quarter, our price target was 175. We think that price target is not going to change all that much off the third quarter results. But importantly, Expedia's stock hasn't done all that well the last couple quarters because we think what the market's been missing is that performance. People have been concerned with the sales, marketing expense of the company, but I think what the market's missing is that those are temporary disruptions from them investing in their platform. Q3 started to support our thesis that their core B2C business is re-accelerating. Their B2B business, which is not impacted by those, continues to be immensely strong. So we really like Expedia. It still trades at a really attractive valuation. And in regards to kind of the travel environment, yeah, there's been some news in the 3 key reports that there was a period in October that kind of slowed down. Booking noted that, but that it picked right back up, and they expect that it's going to be strong through the rest of the year. You have to be aware of the Middle East. What I would say is the appetite for travel is pretty resilient. If people book travel to certain areas that are having God-given disasters or geopolitical crisis, they will shift travel to other areas.
All right, so far this morning, we're seeing 4 of the 10 New York FANG index stocks showing up.
What are the ratings on booking? And before I leave this topic right here, what are your ratings on Expedia booking and trip? Dan.
4 of the 10 New York FANG index stocks are showing up. Apple, number 8, number 9, NVIDIA, number 10, Microsoft, and number 11, Amazon. All right, so these look pretty good. These look pretty good. 8, 9, 10, and 11 spot. We got Booking.com and Regeneron, number 1 and 2. Looks good. Incidentally, when you're looking to day trade, you always want to pay attention to the top stocks on the NASDAQ or the top stocks on the S&P or the Dow. Because if they start off the day pretty strong, generally, if it's after 10 o'clock and they stay in the top 10, they'll probably stay in the top 10 the rest of the day. So, all right, Apple looks like it wants to go. Here's a good testament to that thesis. Okay, if your stock is in the top 10, especially if it's number 1 or 2, watch for it to perform. That's what's happening with Apple right now. Performance, higher highs, higher lows. Simple strategy, but it works quite often. Showing relative strength and high volume. Apple's already traded 30 million shares on a day. Apple's already traded 30 million shares. All right, here's Apple. 28.6. So we're close. 30 million shares. All right, so you hear Woody in the background. If you're a new member, that woodpecker sound in the background, that's bullish flow. And for his brother, sounds like a chicken clucking. That's bearish flow, the chicken clucking. In this case, we got Woody, woodpecker, pecking away. Peck, 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 peck. That's bullish flow. Apple looking pretty good. Looking for more. All right, look for a test of 180. Apple, look for a test of 180. That seems to be in the cards today. We're between the call walls 177.50 and 180. That's using Money Magic's levels. So if you're not using Money Magic's levels, that's what I'm referring to. All right, what time is it? Almost 12 o'clock on the East Coast. I'm your host with the mostest, Cousin Benny, coming to you from theclosingprint.com. I'll be with you here until 2 p.m. Generally, giving you the play-by-play between 9:15 and 4 p.m. Expecting a slow day. Cardinal Health, yeah, nice. Cardinal Health on the watch list. Cardinal Health on the extended watch list. Okay. CAH, extended watch list, showed up on a scan.
Available anytime, anywhere,
On any device for free.
Schwab Network, empowering every investor and trader
Every market day. It's time to look forward.
Find the next trend.
From every click.
Yeah, Cardinal Health is a stock that showed up on a IBD scan. It's called Stocks That Funds Are Buying, CAH. Okay. Eli Lilly was another one. Looking really strong. Booking.com, BKNG. Big move on Booking.com. Brinks, BCO, Brinks Company.
Fastest. Hello, everyone. Welcome to Fast Market. I'm your host, Kevin Hinks. We have a great show for you today. We got a great lineup of people. I'll be taking you through the next half hour. We got Alex Butler.
Let's see here.
We've got Landon Swan from Lightfolio. We've got Ben Wickfine giving the market up.
Oh, Lee Auto's got some action going on here. Lee, let's see what Lee Auto's got going on. Lee with a gap up. NRG we talked about. That's one of David Tepper's favorites when he gets into energy. NRG still going. Sony Group, no follow through there. Vertex, VRTX. Vertex following through. Dell. We were looking for a breakout in Dell, remember? Dell. Okay. Check out Dell's breaking out of a range. Lee Auto and DraftKings, DKNG.
Good to see you as always. Happy Monday. Coming off a huge, epic week in the markets with so many big market moving events. We started out this week kind of drifting, Alex, kind of consuming and digesting everything we saw. What is all the things that we looked at last week?
All right, just posted a graphic in the trading room. There's 6 stocks there: Sony Corp, NRG, Lee Auto, Vertex, Dell, and DraftKings. They're all dark pool flow. Okay, Dell looks really good. Dell looking really good. Trying to break out of 72.40. If it does, the depth of your pattern's about $10. $8 on top of this, so 80.40. Dell.
Consumer sentiment on my mind for the end of the week. There's certainly earnings names. We're going to talk about a few of them. Sure. I don't know that any of them, with the exception of maybe Disney, only down stock this week. Only down stock, but maybe only the only stock that got a wide enough net to maybe get a read through on the consumer, let's say, or sort of maybe travel dynamics. I just don't know that there's market moving earnings. Collectively, maybe. If there's some sort of starts to be a trend that develops, but I think that they're all popular names. They're actively traded names. So if you're a stock picker, if you're an individual stock trader or options trader, there's certainly plenty on the calendar to get your attention. You just may not see it in the S&P 500 or the NASDAQ 100 after the close. Yeah, 6.
All right, so if Dell does break out, you got about $8 on top. So give yourself 80. Okay, let's look at the weekly time frame on Dell. Nice little flag. That's a really pretty chart, really. You got a cup, you got a breakout, a handle, a little high. Actually, you had a handle right in here. Cup handle. All right, so that looks good.
$48 billion in 3-year notes, $40 billion in 10-year notes, $24 billion in 30-year bonds. We've got 102.2 billion set to mature in November. We're matching that. That number of 112 billion in debt that we're is pretty much in line, but these numbers are big, and the fact that the bond market isn't moving a lot is fairly impressive.
I think it's super interesting too, combined with that, and it's sort of been the story, has been increased supply over the last, let's call it 6 months after the debt ceiling negotiations. But we really saw the long end of the curve over the last couple of months moving abruptly to the upside. You had that bear steepening, as they call it, taking place. The 2-year really wasn't participating. Yet all the factors, if it really was more robust growth, inflation concerns, name your pick for the catalyst, you would have seen the 2-year participate. You didn't really see that. And then yet last week when we saw things turn around to the downside, the 2-year was leading that chart as we see it take a back step. So, Kev, I'm in the camp and I've been in this camp. Maybe I was becoming one of the only ones still in it. I've always thought that slowdown and recession was the key thing to worry about. I think that this sort of last 6 months has been more of a, kind of prolonging of the inevitable, and I still am in that camp. So I think the fact that we're starting to see bull steepening take place is the most worrisome sign. Today, though, a notable pause in that recent trajectory.
There is another story out there today, and we're going to go live to the Schwab Network news desk and talk to Ms. Jenny Horn, who's going to talk about Tesla and its news out today. Jenny, a $25,000 car?
This is something that has been rumored for quite some time, but it's nice to finally get that report. We got over the weekend some lawyers saying that Tesla is agreeing to build out this around $26,000 or like $27,000 vehicle in Berlin, according to various reports. So they said that this is a result of, we don't know exactly when production will begin or exactly what it entails, but what we do know is they're closing in on innovation that would allow them to make a lot of these vehicle production elements more simplified as well as just more efficient, thus resulting in that lower price point. And Elon Musk has been pretty transparent about the fact that he is going to prioritize scale and accessibility over the fact of margin, which is something the street doesn't necessarily love. We saw that, from his shares on their last earnings call, but he did highlight the fact that right now affordability is something that's very, very important to him. Also, Tesla did agree to raise its worker pay in Germany, according to reports from the Wall Street Journal. The Wall Street Journal did say that the company will raise wages by around 4% effective in November for around 11,000 employees at their German plant.
Dell. Looking good. It's about to break out. Looks like Dell looks like it wants to go. All right, let's see. Dell, DELL. Let's see what the VWAP looks like. The survey says. Look at that looks good. Look at that. Look at VWAP on Dell. Maybe some put credit spreads, bulk put credit spreads.
It seems that the market doesn't really know how to digest this, because you initially see sort of the gap up at the open, and then you see the kind of subsequent sell-off as the day's gone on here in Tesla. Do you think this is a situation where it's just going to come down to execution, and time will tell sort of the ultimate impact when it comes to the stock price?
Yeah, I do, and I think that right now you have to roll the pains with Tesla. I know that they're not necessarily like a newcomer in the space, like with Austin Rivian, for example, but I think that's actually to their advantage, because now we do have a consistent history of profitability, which is something that wasn't the case 3 years ago. We also have the fact that this is a company that's made its operations more efficient. It has numerous plants now across the world, and I think that people are honestly a little bit too hard on Tesla. It's something people enjoy to pick apart Elon Musk.
It's 12 after 12. All right, let's go listen to Wampner.
Underperformed so far year to date.
Mr. Handsome's on. Joe T.
If that's the strategy that you want to implement, because the market could very easily, Scott, begin to price out those rate cuts in 2024. So I think you have to be very tactical in the industrial sector. Yes, the strategy is long Caterpillar, I'll say this, it's hanging by a thread when you're looking at it from the perspective of where is it in terms of price and momentum
But I
itself.
mean, you just had a chance to rebalance the portfolio and you didn't kick this out.
Thread didn't break.
It stayed in.
Thread didn't break. Thread didn't snap. Still hanging by a thread. I still believe the right place to be is to stay up in quality and to lean towards the mega caps, because I think the mega caps, they are not sensitive to, okay, what are we pricing in? What are we pricing out as far as Fed rate cuts, Fed rate hikes in 2024?
See, we do have a trade alert on this because Bill Baruch, investment committee member, joins us now.
All right.
Good to see you. Thanks for coming on. You bought more Caterpillar, in fact, and you bought more Waptec. Let's talk about those first before we get to the sell. Why Cat?
Caterpillar, it didn't react well to earnings because of the declining backlog, but it was a good earnings report for that quarter. And as Joe said, it's hanging by a thread. What I'm seeing from my levels and the uptrend is still intact. And the strong close last week, I think, is going to be provide some momentum. Looking at 220, 230. But think about the infrastructure spending, the delays in Inflation Reduction Act. Emerging markets are going to be spending more money, and then the onshoring here in the U.S. I think there's just a number of tailwinds as we look to the quarters ahead that this name should perform. Let's not forget, we're just one quarter removed that it set a record high after a strong report. So I think in the coming months we'll see it bounce back pretty well.
All right, so you're playing to be a little early, maybe, or not pay so much attention to any of the macro data, thinking more big picture. Waptec, WAB, why?
I mean, they're in the locomotive space and freight and rails for passengers and freight. And, I think that's just a terrific place to be. And 60% of the revenues, cover or 60 reoccurring revenues cover 60% of their profits. I think that's a really nice thing to look at, especially if we go through, maybe a little bit of a slowdown. Although I don't think we'll have a hard landing. I think we saw
Range bound. Look at the
momentum here.
look at VWAP on
was pretty good about 2 weeks ago, and it brought it out of the gutter. So again, I think strong
VWAP up and to the right. Looks like it's going to go. Dell looks like it's going to go. What about put spread? Sell to open the 71. Buy to open the 70.
RTX off the table and putting that cash to work and concentrating that in industrials. Remember, go back to the middle of the summer, it fell out with the Pratt & Whitney, their engine defect. The stock was down as much as 30%. It bounced back after earnings and had a $10 billion repurchase. So we've come back. It's only down about 15% from where it was in the summer. So I'm using that as an opportunity to take a step back here. I mean, really, at the end of the day, look at the geopolitics. I mean, we're in a nice edge. Any sharper than where we were since the Cold War, and RTX has really underperformed. So I want to get out of that stock and watch it for a bit and concentrate on the two names that I like the most right now in the industrial space. That's Caterpillar and Waptec.
Okay, good stuff. Bill, thank you. We'll see you soon. Bill Baruch with a trade alert for us. All right, so we talked industrials. Now, let's talk banks. Goldman is a laggard today out of the Dow. The KBE, best week since November of 2020. The KRE, regionals, best week since November of 20 also. What about the banks here?
Talking about the regional banks, has anyone made any money on the regionals, since SVB failed? I mean, I see so many of these names are still at those depressed levels. Yes, they rallied last week. But here's what you want to think. Regional banks are what? Very highly sensitive to the U.S. economy. Is the economy slowing? Most likely. Are deposits increasing at the banks? No. Are loans increasing at the banks? Regional banks, no. And is the regulatory environment getting easier or worse? Probably worse. And so I think also with the comeuppance of private credit really stepping in to do a lot of these loans that the regional banks used to do, I still think that from an ETF, from across the board, it's too early to buy these banks. I still think too many of them don't have a catalyst outside of valuations, which is never a good catalyst to make a stock go higher. So I think you want to be patient and wait till next year.
Dell.
Bill Gross is on to something because he called the bottom in the regionals last Thursday. Said he's buying Truist and Citizens, KeyCorp, among others. What do you think about that call? And this timing. I mean, if you're gonna buy the regionals, when are you gonna buy them? If not now.
Not now. I don't think the problems are fully reflected the ongoing problems. Let's not forget They own the commercial real estate. The big banks don't. Bryn pointed out all the headwinds. I think those headwinds are fully engaged and fully enforced.
So do you not agree with Bill Gross?
I don't agree with them. I think it was a trade. I mean, how could you not buy them, right? When you saw rates come down. I traded cat and deer very, very well last week for the same reasons. I'm not ready to buy either. I like both companies, but to me, they're no different than regional banks. The problems are there. Commercial real estate, it's there. I mean, the issues are there. We haven't seen them have to take the write-downs that they brought to going over the next year. So it's really just hard. So why own them when you can own? Goldman's going to recover before the regional banks.
All right, nice follow through on Dell.
Morgan Stanley's underperformed Goldman this year. I'd add some more. I'd buy Morgan Stanley at some point before I bought the regional banks. I just don't see the reason to be a hero when you just don't know what the issues are going to be. There's no reward to versus the reward you can get.
I know, but it's like one thing to be a hero, and it's another thing. I'm not suggesting that you're necessarily doing this. It's another to be crying a zero. And that everybody all negative on the regional banks for the last, I don't know, year about commercial real estate problems that we just haven't seen really materialize. Maybe they won't be as bad as people think they will.
The call was never that the blow up in commercial real estate is happening today. That was never the case. Even though we've seen big firms, whether it's Brookfield or Blackstone, walk away from properties, just turn the keys, and others as well. The call was never, it's happening today, it's crushing today. No, the call has always been, over the next couple of years, is a massive refinancing bubble, and it's not going to get done with rates where they are. They just don't make economic sense.
Unless you think the economy is going to remain, Joe, strong enough, rates are going to come down. KBW upgrades KeyCorp today to outperform. Price target to 15 from 12.5.
No, I'm not there. And I really agree with everything Steven's saying in his analysis. I think he's spot on. I think it's about risk management. I think the impediment for growth when you're looking at money center banks and for regional banks is just so overwhelmingly. And if you have that impediment for growth, you ask yourself, where does the organic growth come from? Now, I know we talk a lot, we say financial sector, so we automatically think about banks and regional banks, but there are fair alternatives within the financial sector. The obvious ones are Visa, MasterCard, but there are asset managers. There's TradeWeb, which is ticker symbol TW. There's Apollo, which is ticker symbol APO. Brown & Brown is another name that you could own. So there's other places within the financial sector you can go. And I think from the risk management perspective, I can't find any other sector that has the obstacles that this sector has in front of it, from commercial real estate to the effect of the economy, to the state of the consumer, to lending overall, and now the growth of private credit.
So Bank of America upgraded, Joe, today. The market performed. That was from underperform at KBW, which we said also made the call on TV.
All right, we're still chopping around.
So, yes,
Most of the FANG stocks are sideways to slightly lower. Apple pulled back from the highs. NVIDIA back from the highs. Dell, a little pullback now.
Right? Let's tick the box. Industrials, the banks. Let's talk energy, Bryn, because oil had its first back-to-back weekly losses since August. WTI is now at 82. What do we do with the energy trade, which was the worst performing sector in the month of October, down 6%? It's also the biggest laggard month to date.
Yeah, I mean, year to date, it depends what you own. You have a Diamondback up about 18, a Devon down around 25. I think you stick with this trade because, number one, you have these like structural, long-term, secular catalysts, as well as shorter term. Saudi came out and said they're going to confirm the cuts. And I think $80, $75 to $90 oil, these companies have tremendous free cash flow yield. And what does that do? That gives you optionality. You can do M&A, you can do dividends, you can do buybacks. So you have so much optionality in these companies. They have really strong balance sheets. So I know this year has been a letdown versus 2022 and 2021, which were just bumper crop years for the energy sector.
All right, let's see what the U.S. 10-year is doing.
Have some of the best balance sheets actually of all the sectors. So I'm
4.6.
And I think better times are ahead.
Joe, the Joe T has 16 energy positions because you just increased your exposure in your rebalance.
We did 12.8% now. I've said that this quarter is the make or break quarter. We're coming up on the winter season, so that's going to obviously have a fundamental impact not only on oil but natural gas as well.
We got off lucky last winter, remember? All the gloom and doom about where natural gas prices were going to go because of the cold weather, particularly over in Europe. I mean, that's one thing that helped Europe avoid, a recession.
VWAP, price pulling back a little bit.
My intuitive sense says that there needs to be a shakeout in positioning in energy, in oil, in the ownership of the sector before we see what everyone sees, which is the expected rebound and outperformance, the style of which it had in 2022 and obviously not having in 2023.
All right, let's switch now to mega caps. Weiss, I'm starting with you. See the gains over the last week? I mean, stock by stock. Microsoft up 6% in a week, okay? Apple, which, the chart looked terrible. There was concern by you and others going into earnings. I wouldn't, you weren't looking for earnings to be all that special. They were good enough. I mean, the stock is back near 180, up 5% in a week. What do we do with this group now?
Look, I still think it's a place to be for idiosyncratic reasons for each stock. So Microsoft actually added to last week. So it's a very sizable position. Last week wasn't just market related. They did launch their AI product, $30 a month. Who's not going to do it, right? And they will keep doing that. News the week before was Amazon signing $1 billion contract to use Microsoft's tools in the cloud. Think about that. $1 billion over 10 years with your primary competitor in the cloud. So the momentum continues there. To me, it's a much safer bet and a much more enduring bet than NVIDIA. In terms of meta, it's the cheapest mega there is, and things are going well.
Why is it a much safer bet than NVIDIA, which is clearly, monetizing AI in a very select way? Like, okay, maybe Microsoft is too, but many that are already monetizing that.
I'm talking long term. Look, NVIDIA is a great company.
You're not positive on NVIDIA long term?
Not its valuation, no. I'm not. I think the valuation reset somewhat.
But the valuation already did reset lower.
Not enough. Not enough. You still have it. So at the end of the day, it's a semiconductor company.
So you don't think they could sustain the growth rate?
No. No, I
don't. You don't take the other side.
But let me finish.
The
competition's heating up. You've got every mega cap company that's seeking to create the same type of chip for GPUs as NVIDIA. You also have, we don't know what you have in terms of double ordering. So high quality company, you should hold it. I think the quarter, I'd be shocked if the quarter didn't give you more of what the last few quarters were. The last quarter in particular didn't give you the same pop as the quarter before, nor should it, because revenues were up 50%. So I like it here. I just prefer to play Microsoft.
Okay, there's the valuation. There's a forward PE of 34.
All right, Apple. All right, so we're looking for ABCD patterns this time of day. Apple just off the highs, below the 180 call wall.
I think the key phrase that Steve said is these other mega caps are seeking to recreate. Seeking is in the future. It's like I listened to all the calls, okay, from AMD to Apple to Microsoft. NVIDIA is still in the pole position. So I feel that this next quarter, I think they're going to crush earnings. I do think there'll be at some point in maybe 2024 where, China is 25%, so we'll have to deal with that. But I think that all these other companies are just going to level up and catch up to what NVIDIA is doing, because guess what? NVIDIA is not stopping. Jensen and team continuing to innovate. So I just think it's a great company. It's Microsoft and NVIDIA, to me, are the most purest way to play this secular trend in AI. And I believe it when Jensen says, over the next decade, we think there's going to be $1 trillion spend converting the CPUs in the data centers to GPUs. Now, that's a decade, not a quarter. And so I think NVIDIA has been very volatile, but if you've been an investor long term, you've made so much money and they've compounded wealth. So I'm selling calls against it. So just on Friday, I sold 500 January calls, because I do think in the short term, 400 to 500 is a stretch. And so I think that move to 444 that it made on Friday was a good opportunity to sell some calls and crush about $19 versus premium.
All right, good stuff. Let's take a first break here. Up next, our call of the day. It's a travel stock, just called Best in Breed. Joe owns it. We trade it. We'll do it next. And later, we have a halftime exclusive, a new golf league teeing off in 2024 with some of the PGA Tour.
All right, U.S. 10-year, just sitting here. Let's see what the dollar looks like. Dollar is back to 105. 10 years just been chopping around. And VIX is pushing back to 15 and change. VIX expecting price action to stay pretty tame this week. As long as we stay above 43.33, we should be in a tighter range. 43.78, 43.76 overhead, first resistance. You got 43.50 below support. Flat VWAP. All right, fading back down into the lower part of the range.
Mind you, even with this near 30% pullback in their price in the last couple of months, we're still at 78% this year. This is still one of the best performers this year, and it's like all anyone wants to capitalize on is the fact that we've seen this weakness persist over the last month or so. So their earnings call wasn't great, didn't exactly change sentiment to the upside because Elon Musk was pretty pessimistic about the state of the overall geopolitical situation of the world, frankly. But I think that when you look at the various technologies they have in place, there's plenty to be excited about in the next year.
Jenny Horn, co-host with Mr. Alex Coffey. I'm going to keep Alex for about another 40 minutes or so, Jen. Then I'll throw him over your way. Jen, thanks for coming on, as always. You know, Alex,
Dow's up 0.1%, 40 points.
Why? Because D.A. Davidson Joe says it's, quote, best of breed. You have that in the T along with Expedia.
Okay. First, on Booking Holdings, the positive is, from a technical perspective, the stock held the 200-day moving average after earnings. Now, 9 analysts changed the price target. Collectively, the average was lowering it by 2.5%. I still believe Expedia is probably the right place to be for online travel. I know we're in both places and we'll maintain that position, but just fundamentally observing the environment for each one of these stocks, the significant international exposure that Booking Holding has places it where
Bookings looks so nice, though. That's a nice looking chart.
You also
Volume.
have Airbnb, Delta, Marriott, United.
Yeah. You think you have too much exposure to travel? You concerned about that? Good question. Consumer discretionary exposure came down significantly.
What does Hilton look like? That was bullish recently. Yeah, trying to break out of this range. Hilton. What about Hyatt? Marriott, not doing as well.
Policy has not really impacted the travel segment just yet. So that's why the momentum element is maintaining these stocks within the strategy. If there's a further deterioration because of the lag effects, then I think quickly to the sidelines is where we would move.
All right, J&J. J&J.
Hey, Scott. Good morning. Well, good afternoon. Former President Donald Trump is back on the stand in his civil fraud trial. Trump testified that he thought several
Amazon.
properties were too high, including his Trump Tower triplex. Now, he also referred to a disclaimer clause in the company's financial statement saying if there is a mistake, you don't get sued by the Attorney General's office. The 4 former Memphis police officers charged with fatally beating Tyree Nichols will head to trial in August. All 4 defendants have pleaded not guilty to second-degree murder. A 5th officer in the case pleaded guilty last week to federal charges of excessive force and obstruction of justice as part of a larger deal with prosecutors. And Mark Zuckerberg had knee surgery this weekend after his latest martial arts sparring session. The Meta platform CEO posted a photo lying in the hospital bed with his left knee in a brace. He wrote that he tore one of his ligaments while training for a fight early next year, Scott.
All right, Silvana, thank you. Silvana, and now coming up, top dividend plays. We'll tell you where you can find the best opportunities right now in the ETF space. We'll bring
S&P 500 still just flat, chopping around.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
All right, most stocks are just taking a break. Apple taking a break from the highs of the day. FANG stocks, no follow through. Can't expect the same kind of price action we had last week. I mean, we can, but unrealistic to believe that we would follow through. We stopped right at resistance on the New York FANG index. That's good enough to tell us to be more cautious, maybe take some profits off. The chances that we turn back down, I don't know. RSI, like it was the previous two occasions when it hit the highs. Same thing with stochastics when it got up into this zone. We're not quite there yet, but could be close to taking a little breather. 50 days right below. New York FANG. Okay, starting to see a little bid in the market at the moment. Looking at Netflix coming off the low here. Netflix coming off the low. Buyers coming up. Still very bullish trend. Meta looked pretty good this morning. Looked like it was going to follow through. Meta. Now we got a doji right at resistance. Tesla looked good and then faded from the morn. This morning we were up $4. Now we're down $2.40. Microsoft. Clearly trending. Microsoft. Look at the volume. Microsoft is probably the nicest looking chart as far as volume is concerned. And trend. NVIDIA looks pretty good too. Volume picking up. Trending above the 50-day, but no follow through yet. So the takeaway, just be cautious today and tomorrow. Maybe take some profits off the table if you decided to swing some into today. So we're most likely going to have a doji back and forth, above and below VWAP, and S&P, doji, doji spinning top.
Everything exchange traded funds. I'm your host today, Leslie Picker, filling in for Bob Pisani. After a miserable October,
Pretty much everything is saying, take it easy. All right, Netflix trying to push.
So with so many concerns still in the mix, no wonder dividend plays are still the order of the day for many asset allocators looking for reliable, consistent returns. So what's the story ahead for November? Joining me to talk more about this, Dave Mazza is the Chief Strategy Officer at Roundhill Investments. He just launched a brand new dividend ETF of the Dividend Honor ETF, and Todd Rosenbluth, Head of Research at Verify. Thank you both for being here. Dave, tell us more about your new fund. You've been referring to these picks as the Recession Kings. What's in the fund and why now?
Yeah, that's right.
TRBCX looking for that to follow through.
Consistently increase their dividends for at least 50 years, each and every year. So when we're talking to investors, particularly in times of uncertainty, as you mentioned, we're looking for consistency and looking for resiliency. And the companies that they'll find in
most recently were through a global pandemic, financial crisis, what have you, and they've delivered for shareholders year in and year out and allow investors to get access to greater certainty when it comes to the income potential and also the opportunity for total return.
Lots of royalty attributes there. ETFs becoming increasingly trending.
All right, let's see.
So how does this one compare to others?
So TRBCX, I'm looking at this one to push a bit higher.
A lot of dividend growth ETFs that are out there. The Spider S&P dividend ETF, SPY, is perhaps the flagship.
TRBCX, T. Rowe Price Blue Chip Growth Fund. Merck, I'm watching Merck here. Merck is on the move. Starting to turn, Merck. Buyers stepping up. You can see these multiple wicks at the lows, right around 102. Looks like they're building a position. This big white candle right here. Third week of October, pushed higher, consolidating right around the 21-day, but not dropping off. RSI is rising. Defensive sector, healthcare, pharmaceuticals.
In November. That's all ahead at 1:10 p.m. Eastern on ETF edge.cnbc.com. I will set it back over to you.
All right, Leslie, appreciate that. Leslie, next, we go live to Boston for a halftime exclusive today. PGA Tour star Rory McIlroy.
S&P fading a little bit lower now.
Talking to new golf league, their team in that set to launch in January. We're back with Rory and Tom right after this.
All right, so New York, the Dow Jones, S&P 500, CEG, Constellation Energy, big breakout, utilities, XLU, nice follow through today. Trying to break back towards the 200-day. Volume. S&P still drifting lower.
Unknown commodity that lacked trust for many. They've really pushed it forward in that front, but they've also really shown that, you have someone who had a plan.
43.50, 43.37.
End up, as I said, but I mean, it comes down to essentially almost a written down piece of paper. Make an expensive
Apple still hanging in there. 10-year hanging out near 4.63%. VIX is at 15 and the dollar's at 105.07. Crude oil 81.97. So we got mixed signals coming into this week. We had 17 bullish signals. 2 were neutral and 1 was bearish. The one that was bearish was everything was at extremes and at resistance. So that's really 2 indicators, but neutral to bearish. And 17 indicators were bullish. Everything momentum-wise was bullish. So I would weigh the resistance and extremes a little bit more heavily unless we see something unusual. I would think that this is resistance going to hold in this area. New York FANG. I don't see a reason to get too aggressive at this point. The time to be aggressive was last week when we got these stochastics turns. MACD crossed over, volume picked up, and RSI rose. Right now we're just pulling back. So I wouldn't get too crazy. Markets are flat, Dow, S&P, and the NASDAQ.
Welcome back to the TGL Golf League, co-founded by Tiger Woods and Rory McIlroy, tees off in January with 16.
XLK looks pretty good, though. Looks like the New York FANG index, really. Tech. McIlroy has the most fluid swing.
Tom Werner, along with Rory McIlroy, should note as well NBC Sports will be a founding partner of the Boston Common team. Gentlemen, welcome. It's good to see you guys.
Good to see you. Thanks for having us.
Yeah, Tom, I'll begin with
Flat VWAP. Looking for it to move back towards VWAP now.
which also comes, I believe, if I have this right, with an equity stake in the league itself.
We feel very strongly that this is a terrific idea. It's innovative. It fuses traditional golf with simulated golf. And, you know, one of the things that I learned during this process is as many people play indoor golf.
Wow, this guy owns quite a few teams. Tom Werner.
We're being partnered with Rory, who is a transcendent figure in golf, in an idea that I think will be resonant not just with traditional golfers, but with a lot of new golfers.
So Rory, help us understand the golf fans out there. What exactly viewers are going to get when they tune in this product on TV? What should I expect?
Yeah, so I think whenever it's being branded as simulated or simulator golf, I think that does it a bit of a disservice. It's going to be a lot more than that. I think, as Tom said, we're trying to bring the game of golf into the 21st century. You know, I think a lot of people will connect with the fact that we're playing indoors. It'll look nothing like traditional golf. It'll look more like an NBA game, hopefully, and sort of trying to give people in the arena
Drifting a bit lower.
experience. You know, we're going to be playing in a simulator screen, I guess, but it's going to be 60 feet high by 60 feet wide, and I think just to give more of an insight, you know, it's going to be team play. You're going to have the players interact amongst each other a lot more. We're going to try to take some elements from other sports into this team play. So
All right, let's take a look at a few other things. UPS.
really just trying to bring the game
Lowe's.
different demographic, whether that be other sports fans or fans that you know, aren't into golf and tune in on a Monday night in prime time, and you know, hopefully we can have it speak to them and they like it, and we go from there. But
HD.
I hope that everyone's excited about it as I am, because I think it could be
Walmart.
So Tom, we have 5 of the 16.
Walmart. TJ Maxx. TJ. All right, so we got a little bit of a fade on TJ. We sold at TJ Maxx position. Took it on Thursday, sold it on Friday. Closed that position. It's a doji right now. It's holding up very well at 91 and change. TJ has earnings on deck.
We're going to create rivalries that will be resonant for most sports fans.
You know, I'd like to switch our attention, if I could, Tom, with you first. That it's been reported recently that Fenway Sports Group recently made a large bid to invest in the PGA Tour. We know about the framework agreement, obviously.
TJ Maxx reports before the market on 11/15. So November 15th, that's next Wednesday. Not the next Wednesday, but the following Wednesday. Next week on Wednesday, TJ reports. So we got a one-day swing out of this one. I don't know if I'm going to do anything now because it's just the volume's tapering off. It looks like it's just going to hang out here.
Can you offer up what kind of conversations you may have had with the PGA Tour? I mean, there's considerable interest in the story. We followed it closely again since it was broken first on this very network. What are you willing to say about the interest that Fenway Group might have in the future of the PGA Tour?
Well, we just want to offer our support creatively to any of the ideas that are welling up, but it's really up to the player to decide the direction they want to go.
Yeah, you'll confirm that there was a bid made at the very least.
Okay, one more little dip here.
Confirm that we've had conversations.
Okay, and Rory, I mean, you're a player director, so you're central to where all of this obviously goes from here. Your reaction now to the fact that multiple bids have been made, and what the procedure might look like from here on to see which one is accepted.
Yeah, so I think one of the great things is there's a lot of interest in golf and in professional golf right now, and the golf has never been
AMD at 113, trading 111.38. AMD. I was just looking at some other stocks that maybe if they pull back, BNC pivots. Flat VWAP, so it's probably not going anywhere. AMD. Nice run last week on AMD. All right, so if it consolidates up here near 110, I'm probably going to do something with AMD. ARM Holdings, I have a position in ARM. ARM Holdings has earnings, right? ARM has earnings the 8th, that's Wednesday, aftermarket Wednesday, ARM Holdings.
Sort of got back into the same boat. I think that's the best thing for golf. So, I would hope when we go through this process, PIF are the ones that are involved in the framework agreement. Obviously, there's been other suitors that have been involved and offering their services and their help. But hopefully when this is all said and done, I sincerely hope that the PIF are involved and we can bring the game of golf back together.
I saw a recent report, I think in the last several days, of your Ryder Cup colleague and teammate John Rahm, who I think was expected to participate in TGL, but now says he won't. And then that led to speculation that he may be interested in leaving the PGA Tour for LIV. What do you know?
I spoke to John a couple of days ago. I would be very, very surprised if that were to happen. John lives in Arizona. The first season of TGL is going to be played in Florida, and he just didn't feel like he could give the commitment that he needed to help the league and help his team.
All right, back down to the lows. Apple's holding up at the highs pretty well.
It's obviously a lot of speculation, but I'm pretty confident that John's a PGA Tour player and will remain one.
Speculation is the word I was just going to use. I guess we can put that speculation to bed. Tom, back to you. You guys sort of both, discussed this when we were talking about this new golf league. And you know as well as anybody. I mean, it's a fractured, it's a scattered landscape for new sports leagues. Padel, pickleball, and the like are all vying for eyeballs. How do you think about that in the way that you'd like this to stand out in a more crowded field?
Well, I love the idea.
More selling.
It's team golf, which is fun. It's the best golfers in the world who will be playing in this league in a new format. It's a prime time entertainment event, and I think it's going to make some noise.
Merck, maybe it gets something going here. Merck, top of the range for today.
Thank you for having us. It's Tom Werner, and of course Rory McIlroy joining us exclusively. Up next, Mike Santoli. He'll be here with his midday word. Halftime's back after this.
All right, so hope everyone's enjoying the day. It's really beautiful out here in the Northeast. It is Monday the 6th. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's pretty slow day, exactly the way you should be playing it. Monday, after a big run-up, don't want to put on a whole lot of risk, especially to the long side. I see lots of puts being bought on stocks like Foot Locker, Philip Morris, MO. Puts being bought here December 1st. The 22 put on Foot Locker, 22 put on Foot Locker for December 1st. Okay, it's either going to hold or it's going to pull back in. RTX, Raytheon, seeing the 82 put for December. J&J, Amazon, Boeing, Nike inside day See some puts on Nike. I don't have any position left on Nike, right? No. Okay, cool. UPS, what's UPS doing? UPS. Kind of a slow day. Slow day. Mm-hmm. Okay, you can see that, we're pretty mixed on the day. You got to really be picking your stocks. Lilly doing well. United Health. Who is that? Regeneron, REGN. Regeneron. Regeneron. Looking for a push higher. Lilly having a good day. Lilly. A lot of stocks just doing nothing, not much of anything. Some of the energy names.
Our senior markets commentator, Mike Santoli, is here. The title of your note here, Chris, on the run.
Well, after last week.
Like last week.
And the question is, if we got the squeeze, do you get the chase? And by squeeze, I don't just mean short squeeze. You had people feel very underinvested if the market is going to relentlessly go up, 1% a day. Russell 2000 up 7.5% last week.
Yeah, IWM. Let's see what that looks like. IWM. Pulling back into the range. IWM.
Still do think you want bonds to just calm down as opposed to just yields come in. Because we had the 10-year down 40 basis points in 3 days. It's up 10 today.
Yeah.
So you still have that sense of an agitated market, not a lot of conviction behind some of these moves. A lot of the kind of momentum signals, the breadth thrust, all the stuff people are talking about on a technical basis is better at suggesting there's a good low end than saying it's up and away from here.
Well, what's to continue that? What's the sedative then for the market? Because earnings are done. Fed's now done for this part. I guess it's the economic data.
It is. Can we be somewhat confident that we're in this decelerating mode without necessarily rushing toward a true downturn? I mean, that's the needle that I think pretty much sentiment wants the economic.
All right, dropping a little bit more now. Apple's still holding the highs.
Low tick alert minus 800.
So far, so good. You got really oversold, as we all know. We know what time of year it is, so we'll see if all that matters.
Yeah, from oversold to overbought.
In a hurry.
10 minutes. Like Joe was saying too. All right, good to see you. I'll see you on closing thoughts. Mike Santoli. Final trades next.
All right, a little dip there. SPY with a little dip. All right, so the stocks that have been active today, for the most part, on the S&P. We had bookings that's managing to hold its own. Lilly, Win, that one was mentioned a couple of days ago. I think on Wednesday. There was a lot of dark pool activity on Win Resorts. MGM active this morning. That got a pop. Elvis, some of you took positions in these. Elvis looks pretty good. All right, a little hammer on the 2-minute chart. Very nice. Very nice.
You appreciate that I'm candid about the positions that I own, right? Yes, good. So you appreciate how much I remember what you say, right? I know, and especially all the negative things too. You like to emphasize those. Steve and I were talking during the commercial break. I mean, it's autos. I mean, that's a challenge. Yeah. Autos are 57% of the revenue, which is up 5% year on year. This time last year was up 24% year on year. Auto demand, car demand is going to weaken as we move forward in coming.
What is Bitcoin doing? Bitcoin.
Uber, Weiss, tomorrow before the bell.
Look, the CEO has just done a fantastic job. Every single quarter he's delivered on what he said he would.
Like a double year to date.
Yeah, the momentum's still there. I don't see any reason, despite a weakening consumer, I don't see any reason for this to come off track. In other words, I'd expect him to report a good quarter, stock to react accordingly.
Bryn, give me 15 seconds on Roblox. You own it Wednesday and overtime.
Yeah, I mean, market's expecting revenues to come in up 17% to 820 million. Don't forget they don't have earnings. Last quarter they had double-digit revenues, they had double-digit bookings, they had active users, but it doesn't have earnings, and so the market's kind of fickle on the name right now. But I still like it long term. I think gaming from the social media platform has years and years of runway.
All right, good stuff. Thank you for that. We'll do final trades next.
All right. All right, so that looks pretty good. Lots of stocks, FANG stocks in particular with block volume.
Closing bell. We have an exclusive today. Mark Lasry is going to join us, the Avenue Capital Chairman and CEO. We'll talk markets, of course. And he just bought a TGL team with the Splash Brothers, Steph Curry, Klay Thompson, Andre Iguodala, part of that too. So we'll look forward to catching up with Mr. Lasry later on. Closing bell, 3 o'clock Eastern time. Hope you'll join me then. Brent Talkington, final trade.
Freeport, while EV sales are slowing in the U.S., they are not in China. We got October sales last week, 6.8 million sales in China. Copper is a key material. I like it during the 30s.
Okay, Weiss, which one's here? You?
You man, look, I don't want to say buy a stock that's up 2% in a day, but it's down quite a bit. I added to it last week, waiting for it to firm out after the quarter. It did, so I think this is one of the stocks you want to own.
All right, Joe T. Eli Lilly, point towards new all-time highs. All right, good stuff. Thanks, guys. See you on the closing bell. The exchange is now.
Thank you, Scott. Hi, and welcome to the exchange. I'm Kelly Evans. Here's the good news. Yields are dropping. And here's the bad news. Yields are dropping. If they drop too much, it could pose a whole new set of problems for the Fed and the markets. We'll look at why and how you want to be positioned now. Plus, do lower rates mean better prospects for housing? Our analyst says yes.
All right, let's see. Apple.
He's here to explain. And despite rising concerns about defaults in the private credit space, that market also keeps growing. We'll talk to one of the big lenders about rates, returns, and also recession risk there. But first, let's get today's numbers after a very hot week for stocks, Dom Chu.
Best of the year so far, Kelly. That's how hot it was last week, but we're starting to maybe show signs of cooling off just a little bit. It was a decently, at least solidly positive day early on.
All right, VIX dropping off here is helping out a bit. VIX dropping off is helping. IWM. SPY.
Low ticker at -800.
Now, just to give you some reference here, at the highs of the session, we were up roughly
Bitcoin.
in the S&P and down 3 at the low. So again, tilting towards the lower end of that intraday range. And by the way, viewers and listeners out there,
NVIDIA. Doji on the daily. NVIDIA. Let's see. Microsoft. Flat BWAP. All right, it's not a whole lot to do here at the moment. Amazon.
Now remember, we kind of got to about 5.02% there, got below 4.5 at one point. So this is an interesting area to see whether or not they do become sellers of Treasury bonds and notes into this kind of strength. We'll see if that plays out a little bit more in the coming days and weeks. And then one stock to keep a close eye on, Dish Network, now falling to the worst level since December of 1998. Those shares down about 25%. A surprise loss for the quarter on slightly worse than expected revenues.
Apple drifting a little bit more back towards VWAP. Most stocks are doing the same thing. Taking a break today.
What drama that has been. Dom, thank you very much, Dom Chu. Today is only the third full trading day, believe it or not, since the Fed kept rates steady and Chair Powell suggested they might be done hiking. And we've already seen a massive drop in bond yields. How much lower could they go? Steve Leisman is following that story for us. Steve?
Kelly, yeah, 3 factors that drove the 10-year yield higher and helped stocks to rise, or actually drove yields lower, and helped stocks rise. All approved last week, but they haven't completely gone away, and they presented new uncertainties for the market. Growth was one thing. We got weaker.
All right, S&P pulling back a bit more.
Low ticker at -800.
Apple as well.
You can see the impact of all that on the 10-year last week, taking the first leg down Wednesday morning with the Treasury refunding announcement, another leg after the Fed meeting, and yet a third move after the weaker than expected job report on Friday. But in a sign that things are still volatile out there and concerns remain, yields are up just a bit today, you can see there. The result of all this, though, was to move the December outlook for the Fed hike to just 7% for December, 12% for January, meaning the market is now betting pretty confidently that the Fed is done with its hiking. Those 3 areas now create new uncertainties for the market to navigate. Here's some of them now. On growth, how weak do we go? Is recession back on the table? On the Fed, Diane Swan talking about
LYV, Live Nation, LYV.
Eventually more hikes if inflation doesn't get under control. And the Treasury, well, you can bet there's end supply.
Yeah, looks acceleration. The 5 days prior, LYB looking good.
He says he fears a debt explosion, Kelly, if they do not. Get to talk about this tomorrow with Austin Goolsbee. He's the Chicago Fed president. He'll be exclusively on Squawk at 8 a.m. Kelly?
That's interesting what you said, though, about Blanchard, Steve, because there were many hopeful that, we could take the deficit risk off the table with yields dropping now, and it sounds like that we haven't quite sorted that out yet.
No. Remember, Blanchard was the one who said that governments could really borrow as long as their growth rate was above their interest rate. Well, that's not quite really happened now that you have these higher yields out there. He says he believes that eventually they may come down a bit from where they are right now, but he kind of takes the market at their word. I just want to show you what he said here about the dysfunction in the U.S. government and how that makes him even more concerned. He says that given the current budget process dysfunction, one must worry that the adjustment will not take place anytime soon. Thus, the debt ratio is likely to increase for quite some time.
Dell showing relative strength, looking pretty good.
Yeah, pretty sober warning. Steve, stay with us. Let's turn now to our next discussion. As one of my next guests says, the Fed's tightening cycle is over, but if yields will no longer be doing the Fed's job, could more hikes still be on the table? Let's bring in Julia Coronado, Macro Policy Perspectives founder, and Peter Bookvar, CIO of Bligley Financial Group and the CNBC contributor. Welcome to both of you. Peter, I'll just let you start. And yeah, so it's sort of darned if we do, darned if we don't on bond deals, I guess, here.
Right. The rise in long end rates were tightening for them. And then how do you define the recent drop? I think either way, the 10-year yield is up about 75 to 85 basis points since the July rate hike. And mortgage rates are up similar. So at least in the housing market, the market has tightened 3 times since the July rate hike. And even when the Fed is done raising short-term interest rates, just by keeping them elevated for a while is a continuous form of tightening in addition to QT that continues on.
We also, Julia, this morning have people looking ahead into next year and talking about when, not if, but when the first rate cut will come. Are they jumping the gun?
No, I think that, in our view, the Fed is done hiking. And so therefore, the next question is how long do they need to keep rates in this restricted territory? When will they be able to release?
Yeah, Tesla, good one. That's definitely a good one.
With inflation? And that's a fair question.
That was a gift.
Forecast is that by the May FOMC meeting, we will have core PCE
A gift at 110.
below 3% on year-on-year terms. And that will be enough progress for them to say, okay, we're going to move in lockstep with the inflation trends to keep that real interest rate where it is, but provide a little bit of relief. And I think that's not too distant in the not too distant future.
Yeah, if you have the opportunity to buy a key stock like Tesla back in the day, in the room they're talking about covered calls. Back over here when Tesla was trading at $100, I mean, buying $10,000 worth of stock, you just every week between then and now, just making weekly income, selling covered calls, buying them back on dips.
Are we going to look back and say, yeah, obviously this was the start of some,
I mean, it was kind of worrisome back then at $100 a share, because if you remember, there was a lot of worry about Elon selling his shares and buying Twitter and all of the stuff he was going through. SPY continues lower. Okay.
Even if they cut, there's a far distance from the zero world we lived in versus even if they cut 150 basis points, takes the Fed funds rate to 4, but they're still going to be shrinking their balance sheet. And we'll see what they're shrinking their balance sheet at the time, but it is still a form of tightening. And the tightening is global. QT is global. The rise in interest rates is global. So there is a continuous form of tightening globally as debt comes due at these much higher levels.
Absolutely. And I think, Steve, that's where Olivier Blanchard and many have been making the point that, markets might draw some relief and the Fed funds rate going from 5.5 to 4, but 4 is still a big problem for instance, the U.S. government.
Yeah, and I want to just go back, because we've been talking about this for a few weeks now. There is a difference between the near-term concerns of the market on the debt and the longer-term concerns. Really, it was August when the market decided the debt and the deficit was a problem, and that came from a 1-2 punch from Fitch, which downgraded the U.S. And the next day, the Treasury surprised the market with both the amount of issuance and the reliance on the long end.
What are the markets doing? All right, ABCD patterns playing out.
Treasury backed off and put it on a little bit more on the shorter end of the coupon curve than the longer end. And so that's the proximate reason, I think, for why yields have edged off right now, or that particular panic's out of the market. But it doesn't remove anything about the longer term concerns. When the market decides to get freaked out about that, I don't know. But Olivia Blanchard is saying what you're really looking for is a primary deficit, which is the deficit not counting interest payments, of around bringing that down to around zero. Otherwise, the deficit is growing.
Exactly.
And the U.S. is about 4%, 3.6%, and Blanchard estimates it could take up to 10 years. But the U.S. is so strong financially that I think what the market really wants to hear.
Okay, most stocks are pulling back a bit.
And then also from the Republican side, that there's some political commitment to keep it under control, of which there is absolutely none now.
No, these are very hard decisions, Julia, to have to be making because they really come back to a lot of the fixed.
Amazon, Microsoft, flat VWAP. Yeah, just sitting and waiting at the moment.
We don't have a recession as a base case. And then actually, when we're talking about Blanchard's analysis, it's built on sort of projections of trend growth.
Is her nose real? She looks like she's wearing glasses with one of those fake noses. I know that's mean, but that's what it looks like. That's weird. Okay. Saudi Arabia, Russia to extend oil production cuts. All right, SPY continues to pull back.
That you might think productivity outperforms the kind of low performance of last cycle, which gives us a little bit more breathing room in terms of the math that Blanchard is talking about. So I think that's the thing to keep an eye on. Does that outperformance of productivity continue?
Julia, I was kind of down. I was down and chill with the idea that the deficit problem wasn't such a big deal because we were growing so strongly. The trouble is that the revenues haven't shown up. In fact, one of the big reasons why we're in the hole we're in is because revenues so dramatically disappointed. So my concern at this point, I don't know what the reason for that
Groupon still going.
Isn't that strong? That's a possibility. Maybe more and more.
What's going on with Groupon? It looks pretty good. Have you seen Groupon lately? GRPN. Groupon. Nice trend. Volume. Kind of sneaky volume, huh? 500,000 a day. Pushing back up to the highs. Cheap stock. Doesn't move a lot. $1 a day. $1 a day keeps the bears away. Looking pretty good, though. Groupon.
Let's say one possibility is that's just volatility. There's capital gains taxes that ebb and flow and can contribute to volatility. And so it doesn't repeat. So again, one of the positive surprises last week was that Treasury came out with a better deficit projection than people were expecting.
Yeah.
So it could be a one-off Q3 that doesn't repeat and we go back to a better, still wide deficit, but a better footing on revenues. Or it could be that they need to fix something in terms of the tax code so that the revenue collection is consistent with a strong economy. And therein lies the danger of...
All right, S&P still drifting lower. Apple sitting on VWAP now. Now, there's a couple of ways that we can do this. S&P can just stay right where it is, or it can pull back. All right, so it can consolidate the gains from last week in time by moving sideways, or it can pull back in price. Okay, so 43.50 is a major support level. We're pulling back. We've had 5 days of buying. Today, we'll know by the close. But FANG stocks all drifting a bit lower right now. Okay. So to start the day, we had 8 stocks green, 8 New York FANG stocks green, and only 2 red. Right now we got 4 red and 6 green. The the NASDAQ 100 had about 70 stocks red. That's actually a few more that are green now. So we had about 30 green. Now we have about 35 stocks green. Starting to build on the green. Okay, that's cool. Apple's in the top 10. Apple with a lot of block volume.
Well, you think about what happens when money is free, right? No basic models of financial analysis work. All of value investing was based on
low tick alert -800.
No discount rate. It doesn't work. Price of capital. All of these distortions that were created in this idea where for the first time in 3,000 years, money was free for a period of time. So what happened when money began to be repriced? It's going to be a hangover from popping. The biggest bubble that I think any of us will ever live through was the bubble of the fixed income markets. But it wasn't just in bonds. It wasn't just that, my God, you can lose 50% owning a 30-year government bond. That was just, it's still not in people's consciousness. I don't think people realize it.
All right, we'll continue to fade. All right, so you shouldn't be surprised with the run-up that we had last week that we would have some give back today. If you have puts on, VIX is pushing a bit higher.
Extreme low tick alert.
Seats were reversed, and so I really would recommend that. But I will say I've been a Berkshire shareholder for 30 or 40 years, and what is the most aspect of Berkshire, I think, doesn't get appreciated, and everything is savings comes to get appreciated in times of dislocation and transition. Is that boy, that place is great.
SPY at the lows. Apple just below VWAP at this point. All the FANGs are fading. Looking for B and C pivots. Looking for B and C pivots this time of day. Tick cumulative is red on the 1-hour chart. So that's telling you look for a higher low to print. If not a give back. I don't see us giving back all of last week's gains because it's the seasonally strongest month of the year. November and December, seasonally strongest months in the year. But we are giving back some here.
Low tick alert
Foot
minus
Locker.
800.
All right, VIX pushing back up to 1530 and change.
Extreme low tick alert.
Tesla pulling back. Tesla, all the FANG stocks pulling back. All right, let's see. Some of these stocks like Foot Locker, I'm seeing some put volume on Foot Locker. Foot Locker, let's see what that looks like. Foot Locker. Okay, looking for this to pull back some more. Foot Locker. All right, let's see what they're looking at. Okay, Foot Locker pushing lower. Foot Locker. Okay. Foot Locker on the short side continues lower. What's Nike doing? Nike. All right, consolidating at the highs. What's that? Skechers. And a bullish trend. Vans was it VFC, the parent? All right, that continues higher. VFC Corp, that pulled back pretty hard at the end of October, VFC, and is bouncing. A gift down there at $13 per share for VFC. That was basically giving it away. Okay. BIRK, that was on the potential buy list. Burke. BIRK. Birkenstock Holdings. That was an IPO and looking pretty strong. What about CART? Okay. And ARM Holdings. ARM Holdings, almost a bearish engulfing candle now. Has earnings on deck soon. What was the other IPO recently? You had ARM Holdings. You got CART. There was another couple of ones there. All right, so S&P at the lows. Apple, Tesla pulling back. Give back. All right, S&P. S&P 500. I'm looking for range bound action, pull back up towards VWAP, get the bears short, and just chop around in this area. So far, that's what I'm looking for. Okay, tick cumulative is red. We're trading 3-to-1 down volume, 3.5 on the NYSE, 2.5 on the NASDAQ. So the bears have it for now. VIX pushing higher. Okay, what's Apple doing? Apple had cleared the Thursday's high. All right, so it's not going gangbusters. I'm not expecting anything to go gangbusters today. Okay, after last week's run, many of these still look very good. NVIDIA. Okay, volume. I'd like to see more volume like Microsoft. Microsoft has some nice volume. It just isn't moving very quickly. It's above this pivot, 346.20. So there's no resistance or little resistance, lack of resistance to 366. So we have another $10 to go. $10 two. All right, we got nice volume. I wish all these stocks look like this. You know, for 2 weeks straight, they were doing nothing but buying Microsoft. NVIDIA looks okay. Amazon just a doji right now. Nice volume though. Look at the volume for the past 7 trading days. Beautiful volume. And holding the highs near 140. Could be worse after 5 days up. 5 to 7 days up. Not expecting price to go up every single day. Watching for consolidation at present. Okay, I'm going to take a couple of minutes, make something to eat for lunch, and I'll be right back.
said there have been 38 attempted attacks on U.S. targets in Iraq and Syria since October 17. Officials added that most of the attacks have come via drones and rockets, but none have resulted in new U.S. casualties or damage to infrastructure. Donald Trump is testifying in the civil fraud trial today. On the stand, the former president said that the Georgia.
All right, we continue to build bear flags, looking for more downside. I'm here with you watching the charts. I'm just eating lunch off mic.
Somewhere in the Colorado area, Mr. Kevin Green to the show. He's going to talk about our other transportation stock today, and that is Lyft. Kev, this company incinerates cash
on a quarterly basis. But, Kev, it's a big but. Aren't things starting to get a little better for this company? This company making a little bit of a comeback.
Yeah, actually, if you're looking at the results over the last couple of quarters, they continue to try improve their EBITDA margin. I think that's going to be the biggest area or the biggest hurdle that they've had over the last couple of years here. And they continue to try to increase their active customers. I think right now what they're trying to really do is not only just maintain the current market share, but really figure out what niche of this market they want to be able to control. We all just kind of talked about Uber in the last segment. They just have a lot more of a diversified business. They have their hands in different areas, where Lyft is really just rideshare, and they're really kind of focusing on the West Coast portion of the marketplace. And if they're able to right-size their business, it would be something that does provide them, a little bit of tailwinds here in the future. Now, it's been a little bit, they've seen a little bit of a difficulty when it comes to trying to become profitable. I think that's going to be another area. Now, a lot of these companies, and Uber just kind of overcame this over the last couple of quarters here, but a lot of these companies have a significant portion of their revenue being paid out, or their cash on hand being paid out because of stock compensation. And then rightfully so, it's a growth company, but that also leads into the bottom line growth that they could have here in the future. So I think if they're able to figure that one out too, I think that could be a little bit of a tailwind for them. So very tough market to say the least, but they're trying.
Yeah, Kev, this is a company that is not keeping up with Uber as of right now, right? How do they increase their network, increase the amount of drivers, increase the amount of passengers? Is there anything they can do? Because Uber has them in scale, Uber has them in, they deliver just about anything. It's just mobility in terms of Lyft. What can it do to really start competing again with Uber?
I think it's going to have to be marketing spend, and unfortunately, that's not going to be good in the near term when you're looking at their balance sheet and their utilization of capital. But at the end of the day, I think Brandon already kind of talked about it in the earlier segment. Uber has
discount that just perhaps not serving me, as I think I'm coming off of some bitterness because I just ordered like hundreds of dollars of foods for my cat. So not my target. I'm not the target demographic right now, Alex, but I can respect. It leads to 9-15% moving around.
Hey, we all have goals, right?
You know what? Maybe one day the cats in my household will get some fresh pen, and I'll report back about how they like it. Well, we'll leave it there for this segment. Now, coming up next, kind of focus on the consumer stocks like Walmart, as well as Target and several others that caught the attention of Deutsche Bank. We'll dive more into the consumer outlook with Anita Young coming up next.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Every morning, our analysis is your blueprint for the day. Bonds, stocks across all asset classes on Morning Trade Live on Schwab Network. Weekdays at 9 a.m. Eastern. No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device or free. Schwab Network.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
back to Next Gen Investing. We'll focus on the retailers, some big box names, some discounters on the mind of Deutsche Bank analyst Christina Tai. Various views here. Joining us to go through this here in studio, senior markets correspondent Renita Young is with us. Renita, where do you want to start? I see Five Below, I see Dollar General, I see Target, I see Walmart. Kind of a blanket updating of a bunch of these retailers.
Yes, a blanket updating, but a clear view of which this analyst obviously prefers, right? Because she prefers Walmart versus Target. She prefers Five Below versus Dollar General. And so we can see that the thoughts of it are different based upon how she either raised or cut the price target. First, let me just read down. Walmart is seeing a price target hike to $188 a share from $184. Target got a price target cut to $123 from $131. Dollar General got a price target hike. Actually, she likes Dollar General versus Five Below, and that price target hike for Dollar General is $133 from $126, and then Five Below got a cut to $207 from $229. Now, here's why. Deutsche Bank says that the macro data is proving to be generally stable to improving in the third quarter of 2023, right? But the consumer backdrop is still pretty volatile, which means things like the trade down effect is happening right now. You can see it. And Deutsche Bank is favoring those retailers with more solid traffic growth. And that would look like a Walmart versus a Target right now. That would look like possibly a Dollar General versus a Five Below right now. And this analyst says that they're also looking at those defensively positioned stocks as well until these views of the consumer can be a little bit more clear, because although we've seen a lot of the consumer story go in the southern direction, right? We still have strong data coming out, although it is growing a little bit slower.
So as far as, okay, I think it's first of all very interesting. There was no mention of Dollar Tree on this earnings note. No love for Dollar Tree, which is I think maybe one of my favorites of all of the discount retailers, because I do love me some Family Dollar. But when looking at like the overall the retail space for the rest of this year, Target, Walmart, to me, completely different companies than Dollar General, Five Below, right? Because I mean, they got that grocery offer, and you have more of that consumer staple type just offering. So there's that more defensiveness. But then Five Below is like, to me, only toys. So that's really interesting. What are they sort of watching out for the rest of this year? Because we're coming up on that key holiday season, of course.
I think you're right about that. You know why? Because Five Below of all four of these seems a little bit more in the middle, really. I mean, it's barely changed on the year. It's trading about halfway between its highs and lows, not definitively in either direction. And I think that while they do have mostly toys, they're benefiting from things like Barbie over the summertime. And for summertime or for Christmas time or holiday season, they may be benefiting as well, because now it becomes a cheaper place to go to get toys.
That's a really good point too. You need to find those good holiday gifts at a discount, but we're dressed like it's Christmas time. Like you did not get the memo, I guess, on our Christmas theme today.
No, I didn't. But I will say this: when I look at these names, I think the most impressive rally, maybe of any stock, has been Walmart. It performed okay in 2022, with very few names performed okay. It performed well in 2020, when basically no stocks did well around the pandemic. It wasn't 2021 wasn't its year, but it wasn't bad. It was sideways, and it has been so impressive this year, up double-digit percentage points, essentially on all-time highs. And you don't associate Walmart, or at least I don't, with growth performance, stock price appreciation. This is a name that is a defensive investment, kind of an all-weather investment for many. And it's doing just that, and it's doing it with double-digit price performance. A really impressive rally.
It's definitely benefiting from the trade-down effect from Target directly, and the fact that it does have this massive growth of groceries in it, and those are necessities, obviously, and people go there to get cheaper groceries. So that it's really got a benefit from there too, as well as the cheaper toys as well.
Yeah, and I will say that right now, I mean, I wish I lived closer to a Target based on Walmart, based on how expensive the rest of everything has gotten. I mean, grocery stores in the heart of the city are so ridiculous that I would love to have the option.
It looks like another bear flag on SPY. Be careful here.
They're really great breakdown on the outlook for a lot of these consumer stocks that have been seeing some very different price activity as of late, especially like a Walmart versus a Target. Thank you, Renita Young, as always, senior market correspondent for the network. Now coming up next, it's time to talk all things Rivian. We will be discussing what to expect from their third quarter, and perhaps some of the disparity between them as well as Tesla, with Kevin Green coming up next.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us this week at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome back to Next Gen Investing. It's time for Under 30, and we'll focus in on Rivian. Jenny, this is exactly the type of name that I think sums up the kind of names reporting earnings this week. They're big names. They're names that we talk about daily, but I don't see them moving the S&P 500. I don't see them moving the NASDAQ 100. That's nothing to them. They just don't have the market cap. They just don't have that type of macro read-through. But there might be as many eyes on Rivian after the close for different reasons, because people involved in it or wanting to trade it, as there is in some of these names like a Microsoft, for example, that have way bigger impact in the overall market.
Yeah, that's a great way to frame it, because I do feel like Rivian.
All right, we'll continue to show potential bear flags. S&P.
Versus like Apple, which has the capacity to move 3.
Another bear flag, pulling away from VWAP, giving back some of the gains that we produced on Friday. S&P is off 50 cents. Spiders off 50 cents. Not too bad, all things considered.
Yeah, I mean, this could actually have a decent little reaction here if we actually do see better than expected earnings here for Rivian. And that's actually what they did in the last quarter. They really did beat the street's expectation for top and bottom line. And so if they could do that again for this quarter, I think that would be a boon for them. But they are going to have a little bit of headwinds in order to be able to do so. The market is expecting revenues to come in at $1.36 billion, and the loss per share estimate right now is $1.36, and that's actually been revised a little bit better, about 5 cents better over the last 30 days as we start getting.
All right, can we print a higher low? We need to get above 434.50, 434.60. For now, though, excuse me, for now, looking okay. Apple's still hanging on to VWAP. A lot of block trades on Apple today, at the bid and at the offer. Tesla was a big one, $500,000 share block at 216.64. Tesla 216.64. There's 500,000 shares that went off there. 216.64. 216.64 Tesla. All right, we're right below that level now. Just looks like some give back. That's what it looks like right now. Giving back some of Friday's gains.
The best marketing for a company like Rivian that's trying to break into an industry in these earlier stages is to get the vehicle on the road that looks a lot different than the other cars driving. You don't need to have a commercial on the TV. If you're
Foot Locker. Saw a lot of puts on Foot Locker continue.
Cool of a concept as that is, it's an F-150. Kev, when you start looking at this company in the long-term trajectory, there's a lot of these type of names trying to, break into this space, do what Tesla did, but we're not in the same market environment that Tesla was in. Money's a lot more expensive now. What's the runway investors are going to be willing to give some of these companies that profitability when there's already a name like Tesla that's proved the concept?
Yeah, as the EV space continues to expand, Tesla is not going to be the only player that's in town. I think we all need to recognize that they're a great player in this space. They have been able to build up and have skill when it comes to their business. The profitability is probably the best, is actually the best that's out there when it comes to EVs. But we also know that there's going to be other players within the space. What I would say for those companies that are still trying to become profitable, you're going to start seeing them really focus on their own specific niche in the market instead of trying to provide all these different vehicles to be able to hit certain segments of the market. They might find one or two areas where they are just really good and capture the attention of the street here. And I think Rivian has that ability, especially when you look at the pickup EV space. Now, yes, the F-150 is going to be a challenge for them, but you can also hear some of the commentary when it comes to Ford that their profitability when it comes to trying to scale up that business is not going great. In fact, they probably are actually going to reduce the amount of spend when it comes to their EV business in 2024 and 2025. So I think Rivian has that.
All right, so we're drifting a bit lower.
And then also we probably see some consolidation.
Apple.
We start seeing a lot of that technology becoming really great in certain areas of or pockets of the market, kind of like Lucid has really good battery technology. Maybe we start seeing them really focus on just the battery technology side instead of trying to ramp up a full-fledged auto business, because it is very tough right now, which with high rates and a consumer that is really focusing more on the experiences, I think it's just going to be very tough. So I would expect consolidation.
Foot Locker, a lot of seeing a lot of puts on Foot Locker, seeing lots of puts.
I think you set up Rivian quite nicely. But we get the senior loan officer opinion survey coming out here in about 5 minutes. Jerome Powell really, I think, scratched the back of the doves was the takeaway last week. Any chance that we're going to get some of those potential reasons why that was the case in this survey?
I think for this survey, we probably will start seeing or hearing about cracks within the lending space. So we'll get a little bit more of a geographic reason as to potentially why that is happening, what the overall sentiment is when it comes to bank lending. And if we continue to see some of that sentiment,
Oh boy.
Soft data when you're talking about sentiment measures, I think that would be ultimately bullish for the equity markets. I'm not sure from a long-term standpoint if that's going to be sustainable, Alex. I think you and I have had this conversation back and forth. Good data is good data. You don't really want to have that much bad data, especially when it comes to jobs. Jobs data in itself, or when you're looking at lending, once that ball gets rolling and you start seeing a degradation within that market, it's really hard to start to try to pick that up. With the Fed that has $7 trillion still on their balance sheet, I believe we haven't even seen a lot of the bonds roll off. It's going to be a little bit difficult if we do see a situation where they.
I think it's a great setup, and we appreciate it. Kevin Green, senior markets correspondent for the Schwab Network. Looking forward to this survey coming out in minutes. That's going to do it for Jenny and myself. So coming up next, we got the watch list right here on the Schwab Network.
All right, looking for a higher low to print. Foot Locker continues to ramp lower. Foot Locker. Foot Locker lower.
flight attendants. They're not nervous and I'm not going to be nervous. Financially, I'm the flight attendant.
What's Dell doing? Dell had a nice morning. Dell looking for our B and C pivots. Dell.
I'm Nicole Petalini, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, any device, for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Binge watch the market with the Schwab Network. It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on the next good investment.
Available anytime, anywhere, on any device, for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime.
All right. All right, market's not too bad today. Off a bit. We're off 40 cents right now on the SPY. No big deal. Given the crush, the bull crush, crushing the bears last week, straight up basically. Not a bad week. Last week. XLK doing all right. XLK sector hanging in there. Looking for a push higher. This is seasonally one of the strongest months of the year next to December, so I wouldn't be surprised to see price hang out here for a few days and then move higher after last week's rush to the upside. All right, so this is the Dow. You can see what generally over the last 5 years we typically see. Let's go 15. Let's go 20 years. 20 years. You can see November, over 20 years, November tends to be a very strong month. So is October and December. Now, October wasn't very kind to the markets. That's the industrials. Let's see what the S&P looks like. S&P. Okay, going out 20 years again. You can see November, pretty decent month. November, December, going out 20 years. On average, we tend to see some decent returns. So that looks good. The Qs going into year end. Look at November and December. Here's 20 years. November sticks out. Okay, IWM also. I'll go with stats any day rather than people's opinion. Okay, November for IWM, small caps. This is a really good month for small caps. Okay, still looks like a bear flag.
Hugh Johnston will be its new CFO. He's joining from PepsiCo, where he spent 3 decades at PepsiCo. He was CFO there since 2010. Interestingly enough, happen to see he'll get an annual salary of $2 million with an annual bonus target of at least 200% of his base pay. So not a bad compensation package there. Disney shares are lower today, down about 1.5%. Pepsi shares up about 0.2%. Probably not on this news. Probably more so maybe some anxiety about the earnings coming up. But Bumble, meanwhile, announced a CEO transition as well. Its founder and CEO, Whitney Wolfe Herd, will step down from her role. She'll become executive chair of the company, and she'll be replaced by the current Slack CEO, Lydia Jones, who will succeed her on January 2nd of next year. This comes a day ahead of Bumble's earnings. They'll report tomorrow after the bell. And Jones, I think it's important to note, has a strong product background. She came from Microsoft and Salesforce and Sonos. With its plans to incorporate AI. Just taking a look, Bumble shares are down today about 5.7%. But again, it's ahead of earnings. Some anticipation there.
All righty. See, Merck's pushing a bit higher. I just sold some covered calls on Merck for $3.31 and $3.32. So average $3.31, $3.32. Those were the January 105s. The way Merck is acting, it was probably just going to sit here and do nothing. I have shares on Merck. Looking forward to get above 105. If it does, between now and then, I'll decide whether or not I want to get assigned for a profit, or if I want to roll those covered calls up and out to maybe February. What are those going for? February right now. February. Okay, so I could roll out to the 110s for a credit at some point. So this is my thinking. All right. So I haven't shared this with you, but I have talked about this in the past. So as the markets, let me just go to a different chart. Let me go to, this is a little bit better. All right. So as the markets continue this fade over the last 3 months, what I'm thinking is selling premium. Okay. I will probably sell premium less when we start to look like this over here on the left, like in January, where we took off to the upside. Quick 2 or 3 weeks consolidation, pop, 2 or 3 weeks, consolidate, pop again. We're currently not doing that. So I'm selling premium on positions that I have and bringing my cost basis down because the markets aren't going anywhere. This little grind lower. I mean, the high was 82.93. We're currently trading at 75.92. All right, so 700 points. Not a lot for an index like this, but until we start to trend, we'll start to trend at some point, break out, take out this 82.93 maybe, and start trending again, like we did over here when we consolidated and we broke out, consolidate, break out. Once we start to do that, then I'll be doing a little bit different types of trades. I'll probably be doing more bull put credit spreads and selling more covered calls, holding on to shares. It's not that much different from what I'm doing right now, but waiting for a breakout. I'm looking for the trend to start showing itself. Right now, not so much. We get this pullback, lower trend line, we bounce back up to the top trend line. Now we got a trend line to work against. We bounced up against it. We bounced up against it in mid-October, came all the way back down. Back to that trend line again. RSI starting to curl lower. Stochastics embedded, MACD crossing, similar to what we've had before. Are we going to go sideways to slightly lower? Anyway, so what I was saying before was trading things a little differently. And until we start to move higher, I won't be doing like call call spreads, looking for higher prices and a trend. I won't be doing that until we break out. Right now, I'm just doing credit spreads wherever I can, or cover calls while I'm waiting for the markets to take off to the upside. We're not doing that yet. So Merck's a good example. Merck hasn't gone anywhere. I have shares. I want to sell covered calls while I'm waiting. I mean, you look at it. So let's say you bought, I didn't, but let's say you bought Merck over here the first week of October at 104, and it's still at 104. Yeah, it dipped a little bit, but still at 104. You got 100 shares at 104, and it hasn't gone anywhere. Well, if you were selling covered calls every couple of weeks, you'd have that income while you're holding on to your shares. Let's see, Apple, slight downtrend. Credit spreads, bull put credit spreads, looking for a higher high. Same thing with Dell, bull put credit spreads, or just credit spreads, selling near the money put, buying out one strike out of the money, and looking for prices to pull away. I'll just collect the premium rather than trying to buy calls and maybe not get much profit out of this. MACD's turn is stochastic rising, RSI rising. So Dell looks pretty good. What's IBM doing? IBM. All right. So shook a lot of people out, shook me out on IBM on the way on the pullback and turned back up. IBM looks good. Let's see. IBM doing well. IBM's doing well. I know acceleration, you were in it at one point. I don't know if you're back into it. Qualcomm had earnings last week. Still consolidating right here. Qualsys. That had nice earnings. All right, so we were looking for a flag. That's what we're getting right now. So that's good. What's NVIDIA doing? NVIDIA. Okay, so we're not following through. We're getting more on the sell side. So NVIDIA reports on the 21st. That's 2 weeks from now. So 2 weeks from now, Tuesday. 2 weeks from now, Tuesday. Or you could say 3 weeks. The 21st. Not next week, but the following week, the 21st on Tuesday. NVIDIA reports after the close. NVIDIA doing well. Bren was talking about what she was doing, selling covered calls while she's waiting next couple of weeks. I think she said she sold them for $12 each, like 500 of them. It's not a bad trade. Every time she does that, she brings her cost basis down. So if you have like a $10 stock, let's say NVIDIA is a $10 stock, and you sell covered calls for $2, for each 100 shares. You just subtracted $200 from your $10 price or $8. So, you have to figure in commissions and everything else. But every time you do that, you're bringing your cost basis down. Yoda was just talking about Tesla earlier. If he keeps selling Tesla covered calls every week, eventually he's going to get his cost basis down here near 100. Tesla's showing a little bit of a bearish sentiment at the moment. Apple's flat, but generally we're making lower lows and lower highs, so depends on what happens with Tesla this week. Yeah, IBM. Yeah, I know that you looked at it once before. I was looking at it too. It passed me by. My point of view is that I don't want to have a whole lot of open positions right now because as much as I think the markets could move higher into November, December, I don't want to be in a position where I have to start closing a bunch of positions. I'd rather sell some covered calls or premium credit spreads and make money that way with somebody else's money. Because a credit spread, you're getting a credit. You put the trade on, you're automatically getting money in your pocket right off the bat. If the trade works in your favor, then you keep the premium. So that's what I like about credit spreads. I have one on IWM. You know about that. I talked about that on Thursday, Friday. What I planned on doing with IWM was to sell the 160 put, buy the 155 for protection, sell the 195 call, and buy the 200 for protection. For that, I have $675 credit. Looking for prices to move higher. Now, for some reason, this starts to charge downward. I don't see that happening, but if it's some reason it starts to charge downward, I'll start to consider rolling this side out or just closing the position altogether. More than likely, we're going to push higher into November, December. I showed you before IWM seasonality. This time of year is actually very bullish for IWM. Oops. Okay, here's IWM. November is a very bullish month, especially if you go out 20 years and you average your stat. There's your November, 80%. Okay, so IWM. All right, looking for that to turn back up over the next couple of days. All right, Rick's looking at calls on NVIDIA. Okay, cool. All right, so Yeah, it looks really good. NVIDIA looks good. NVIDIA on a buy. Looks good, Rick. All right, 433, NVIDIA. Okay, NVIDIA looking pretty good. NVIDIA on the move. All right, what's Dell doing? Dell bouncing. Looks like an ABCD pattern on Dell. Dell ABCD. All right, so nice little bounce. All right, still not out of the woods. Still looks like it could be bear flags, so be careful. Sector-wise, we're worse off than we were this morning. We only have 5 sectors, really subsectors. Healthcare and consumer staples still look good. Technology managing a positive gain today. Crude oil's higher, and pharmaceuticals. Everything else is pretty much off on the day after a big move last week. Dell. You got a B pivot. Looks like Dell's going to head back up to the highs. NVIDIA. NVIDIA. All right, heading back towards VWAP. Looking for a follow through. A nice volume right in here. You see that volume?
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account. Plus, cash solutions, all disciplined for
NVIDIA.
no monthly service fees or account limits. Unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees.
Apple pushing. This is a pretty good sign on Apple. The fact that buyers are coming in here. Lots of blocks coming through. 150,000, 150,000, 100. That's 450,000 shares right there in the last few minutes on Apple. Nice. Snowflake coming off the low. Snowflake had a pretty decent drop today. Snowflake coming back from the lows. It's quite a drop on Snowflake. Snowflake. Tesla still off $3 on the day. Tesla. Be interesting. They pull that one off. Microsoft still up $2.20. Microsoft looks good. Grinding. Microsoft grinding along.
We have so many different components to our company. We're doing search advertising, social, display, CTV, and now ODM, and we keep growing.
So at this point now, we talk about earnings season, and your last week's earnings were stronger year over year.
Yeah, nice one, Rick.
Yes, absolutely. So we've been growing, steadily and through the past 3 years, quarter after quarter after quarter after quarter. Again, this quarter, we grew 17% in revenue, 29% in media, and we're going to continue to grow. What drives that? We have an amazing team with an exceptional execution ability. We're basically a technology company, so everything we do is through technology. It's for the amount of money that we're generating because we're a very small company, it's a 500 people company, and it's very well diversified. So we're not putting all our chips on one specific thing. As I said, we have so many different activities that are trying to get as much as possible through advertising budgets, again, through technology. We're only doing things through technology.
So when we talk about generative AI powered tooling, I don't fully understand the competitive landscape, but we want to hear, you must be facing some headwinds, some tailwinds. Tell us a little bit about that. How does it work, and now, why is it so important now?
Yeah, sure, absolutely. So we have an AI lab, and we've been investing in that heavily in the past 3 years. We just launched a new generative AI product called Wave. And what it does is, when we launch a campaign for retailers, if we take all their data, we can then combine their data with the product data, promotion data, frequency data, see which campaign is better, traffic jam, demographic.
All right, so we're looking a little better here, like we might actually get ourselves out of this hole. All right, so it's 2:31. You know that we're looking for institutions to show their hand. Looks like they're buying at the low here. NVIDIA, nice little pop. Keep an eye on NVIDIA. That's a nice little setup that Rick shared. NVIDIA, nice little pop right here through this area. Looking pretty strong. Snowflake popping, Apple popping, all the FANG stocks popping. Okay, that looks good.
Not just a Wave, on our entire retail solution. We're working with all the biggest retailers out there. Amazon is obviously the most advanced video technology. We launched Wave with Amazon, but we're working with so many others. So many others, Clover and many others.
Understood. And now, at this point now, when we talk about the advertising and marketing industry,
All right, grinding right back up to VWAP, Apple, back above VWAP and rising.
People always would buy when you advertise. So, advertising will always go up, budgets will only grow. And we're seeing that in the past few years, the budget of advertising only grew because the economy needs to continue. Sales needs to grow. And, we're feeling very bullish about that.
right. And what's the final thought here? For your goals going forward for 2024, what would you like to give to clients and everybody knows it and takes it away with them?
So, we understand that generative AI is the future of advertising.
and we're investing heavily in generative AI for advertising technology. And we're going to continue to grow, and we're going to continue to invest in that specific technology. And, we have high expectation of taking more and more market share as we've been doing so in the past 2 years.
All right. It's great to see you, Cal Jacobson. Thank you, CEO of Trading Network. Thank you for joining us. Still ahead in the second half of our show, we're taking a look at retirement planning and some strategies for overcoming those fears that
All right, nice little rally coming in. Right.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend.
All right, nice little rally. SPY off the lows, S&P off the low. Pushing through these pivots, looking for a push back to VWAP. It'll look pretty good on the daily, right?
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free.
S&P.
Schwab Network.
Kickstart your morning with Infogos commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Petalini, coming live from the New York Stock Exchange. As you see markets going back and forth over the unchanged line, mostly red now. And you see the VIX moving higher to the level of 1529. As you see here, the S&P down 3 points, has been up fractionally. The Nasdaq is up 30 points. The Dow is down 26 points. It's worth noting that the Nasdaq has been up 6 days. The Dow and the S&P 5 days. The Dow came in at a 6-week high. The S&P and Nasdaq 3-week high. We had a great week last week. So I want to have this discussion with Ben Lichtenstein. I know he's going to take over the small caps too, but see if he can contribute 90 minutes left in the day. And I know some other people came in this morning pretty excited to say that last week was the best week of the year. That's a big deal, right?
That sounds to me like they're pretty excited still for that poll, but yeah, it was a big week to say the least. And a strong week higher. We're really holding on to the gains today. Also, I know they're kind of mixed and negative on the day. The losses are minimal compared to the gains that we saw last week, where they ranged on the trade that began the session here this week. And just not a lot of conviction one way or the other, but zero rejection either. What we're looking at here is what we saw.
Okay, up, down volume. 2-1 down, 3-1 on the NYSE, 2-1 on the NASDAQ.
it's been a bit weak relative to the other majors, and I think that's what's holding the S&Ps back a little bit. The Russell down over, well, about 1.5% now as we speak. Take a look at the S&Ps relative to last month's highs and lows. I want to show you this chart because here's that move we just looked at, 41.22 all the way to 4400. And this basically traced a full month's worth of downside activity throughout the month of October against some of the selling we saw from around that 44.60, 44.50 level all the way to the lows we just rallied off of. Take a look, it has us right back to the 50 to 200 moving out. The S&P is looking at here a pretty good representation of the Dow and the NASDAQ. Now, the Russell, a bit of an outlier. It's still below both of these closely watched levels. So, something to keep an eye on this week. See if we can add to the gains. I think rates, I think the dollar, and some of the data drops going to be a big contributing factor to that. Yeah, it's not very high this morning today and into the close here, that's for sure. But there's a few contributing factors. We heard about OPEC, we heard about, I should say, Russia and Saudis continuing some of those production cuts. Crude prices are big here right now. You've got the dollar, which has been coming off recently from 107 today. It's actually slightly higher right now. We're down to 105.20 as we speak. We're taking a look at crude oil again. This is the move lower last week, Friday, 83 down to 80. I want to show you where we are on the bigger picture here because we're kind of reversing that rally that we'd seen up to 95, and this is all of the price activity since the year and not really raising too many concerns here. You can see we're holding the lower 50-day moving average. I think we're kind of in a bit of a range here. It looks like around 80, maybe it's 75 to the downside, 95 to the upside. That's the moving average.
All right, most stocks are pushing higher. S&P, nice follow through. Support held 43.50. VWAP is next.
There's a lot of concern with retirees, and I think anytime you have market volatility, it's really scary. I mean, when people enter retirement, it can be an anxious time period. Now you're not putting money into these accounts anymore.
NASDAQ 100 growing in terms of green on the day. We're about 40 stocks green, about 60 still red. Booking.com, Vertex, Regeneron, Costco, and Monster Beverages. That's the top 5. Booking, Vertex, Regeneron, Costco, and Monster Beverages. Apple's number 7, Amgen number 8, Starbucks number 9, NVIDIA number 10, and Microsoft number 11. Number 14 and 15 is Google and Amazon. Booking having a good day. Booking up 4%. A little flag at the highs over the last couple hours. Vertex looking the best out of these 5. Vertex. Costco having a good day. Have you guys looked at Costco today? Costco doing well. Nice day on Costco.
High took alert plus 800.
NVIDIA through VWAP. NVIDIA through VWAP now. Okay, Costco looking good. Costco.
mistake we see is folks enter retirement and they keep that same risk level that they had when they were 30 or 40 years old. It's a different time period. We need to take money out. The venture company's not going to come to us and say, well,
Oh boy.
Roth IRA is a great tool for folks that are working today, in particular if you're not in a very high tax bracket, right? The benefit of doing a traditional 401k, you get that deduction now, which is always nice at tax time. But I promise you, the number one concern we're wrestling with our retirees is the amount of taxation. A lot of people think they're going to be in a lower tax bracket when they retire. That's not the case for everybody. So Roth can be a great way to build that money that's growing and coming out income tax free. Now, if you're a retiree today,
All right. SPY continues to rally, looking very strong. S&P. Nice strength off the low. So that looks pretty good. When you think about the S&P, with 2-to-1, 2-to-1 down volume, not too bad. Okay, so above the 50-day, day 2, we did dip down to it. That's pretty interesting. Okay. Stochastics momentum, MACD momentum, and stochastic still in play. RSI still rising. Let's see what the number of stocks above the 50-day look like. Kind of a boring day, unless you took trades early in the morning, like Apple. All right, so the number of stocks above 50-day sort of flagging, so that makes sense. I'm not going to go straight up. That was hell of a move last week, Tuesday through Friday. All right, so we're starting to pause right here at a previous pivot. Keep an eye on S&P. We have a pivot right there, right around 1 o'clock, where we got rejected. We're at VWAP. Keep an eye on your FANG stocks. That'll give us a good idea what to anticipate. All right, looks okay. Microsoft. NVIDIA new highs. Nice. NVIDIA new evening highs. Google looking good. Our FANG stocks look like they're getting bought.
7 from our studios in Chicago.
And from the heart of Wall Street, New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis.
All right, looks like we're going to push right through here. All right, very strong. We got Apple, Microsoft, Google, Netflix, Nvidia. Netflix is still trying to go green right here. Nvidia continues to push higher. Meta is up $1.57, following through. Amazon looking for a pop.
Available anytime, anywhere,
on any device for free.
Schwab Network, empowering every investor and trader
Every market day.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Missed out on today's market headlines? Get caught up and catch the rest at SwapNetwork.com. Available anytime, anywhere, on any device for free.
Welcome back to the Watch List. And we're watching the Magnificent Seven, of course. So these stocks really have carried 2023. When you look at the S&P 500 and the Nasdaq, it's been such an exciting year. But now what? Is it going to be the Magnificent Seven for 2024? Fewer?
All right. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com on a rather slow evening trade session. We started moving higher right around 2:15. Many stocks are popping. Apple's starting to go. Nvidia's moving higher. It is Monday, the 6th of November, the first full week of the month. FANG stocks recovering off the lows, starting to push higher. There goes Google. There goes Netflix. All right, Netflix is green on the day now. Again, it was green this morning. It dipped intraday. Meta on the move. All right, looks good. What's Dell doing? Dell, wanted to do some credit spreads on Dell. Dell, all right, breaking higher. Looking good. There you go, Dell. Merck trying to turn the corner. S&P continues to ramp higher. Nice job off of support. Good job. All right. It is almost 3 o'clock on the East Coast. Not bad. Okay, Microsoft. Microsoft on another buy signal. Microsoft. Netflix on a buy. Netflix is on a buy right here. Netflix on a buy. Amazon. Okay, AMD. Watch AMD. AMD. Apple. Apple. Okay, Apple on a buy. Resistance is 180. 177.50 was the call wall. We're above that. NVIDIA on a buy for the last 45, 60 minutes. Meta. Okay, Broadcom turning the corner. Tesla just went on a buy signal at the low. All right, not a bad day so far. The dollar at the lows is pushing off. We've got 10-year continues to push a bit higher, so that's some pressure. VIX is dropping off, so that's helping equities, but the 10-year is pushing a bit higher. US 10-year pushing higher. We want to get that back down. It bounced off the 50-day. NIMO 63. That hit 98 on Friday. All right, tick cumulative is turning on the hourly. That's kind of interesting. 30 minutes turning as well. Okay. And the 15-minute. Okay, tick cumulative. All right, so consolidation day after 4 days up last week, in some cases 5. The indices closed at resistance. We had NIMO at extremes, advanced decline at extremes. Number of stocks above their 50-day hit 50%. So not a bad start to the week. We didn't fall off. We did test lows and buyers did step up. So that's a good sign. And Apple continues to mush higher. All right, so there goes Apple. Apple, the FANG stocks look pretty good. So if the FANG stocks are looking pretty good, then we can go look at the New York FANG index. That should tell us a lot. New York FANG index. Okay, we want to close in the upper half of the daily range and get above this trend line. This trend line, obviously, it's kind of subjective. Could be off by at least 0.1% or more. And still, you can see the bullish trend here. I'm looking at RSI 2. MACD's cross, stochastics rising. But tomorrow we should get a better understanding of what we could expect this week. Stocks holding up fairly well. Stocks holding up fairly well. The FANG stocks. What's Bitcoin? All right, Bitcoin's back above 35,000 this week. All right, so this looks pretty good. Looks pretty good. Bitcoin, let me take a look at Bitcoin.
I think coming off such a big week last week and starting with such a slow start to this week, the market drifted. And I think it's still drifting. And the choppiness that was in October.
Bitcoin weekly, looking good.
In November. And you're right, there was a bit of a late morning sell-off that
Okay, weekly looks good, right? Not falling off, just consolidating near 35,000. All right.
which is weighing down probably some of the other indices, down about 1.25%. That's a heavy day for Russell. That, remember, late last week, mid last week, has led this market higher in some big percentage moves. So, look, a little bit of backtracking on the Russell here, but all the other three really close to unchanged, Caroline.
Kevin, do you look at that as backtracking, and that backtracking is kind of just digestion following last week's huge run higher, or something?
Yeah, I think you got that right. It is digestion or consolidation. Finally, somebody saying what I was thinking.
Bets are off. Yeah, I mean, our crystal ball is becoming more clear, and I do think it's going to be a story of the next couple of months. I mean, Scott, we looked at again, it's the size of the debt piles that need to be refinanced in 2024, whether it's the government, whether it's the corporates, whether it's the banks, all of that is going to have to come to be refinanced. And so to me, in order to say we now have an all clear on stocks, if it's time to go all in, we have to have a Fed pivot. We have to have the Fed say that we are going to cut rates sometime in 2024.
Okay, market's starting to push a bit higher as well. Vertex, highs of the day, Vertex. Just off the highs of the days. Booking.com looks good. Costco having a good day. Monster Beverages having a good day. Apple having a good day. About to close near 180. Apple. Nice. And now if we can get above 180, that would be a big deal. Okay, Apple at the highs. Looks good. What's AMD doing? AMD. Okay. Looks like a B pivot. AMD.
Huge bounce in small caps, for example. Now they're giving 1.25% back today. So where do I want to place my bets over the next 6 weeks? Let's take it short term, 6 weeks.
I am still in the mega cap tech camp, and the reason is, everybody's sold tech because we're worried about bond yields. But from my perspective, maybe there's some sort of valuation impact. But big tech is where people have the most conviction right now on being able to ride out whatever growth slowdown we're going to have in 2024. And that's what the price action has suggested. I mean, every time somebody sells tech, somebody else steps.
All right, just consolidating right at that previous pivot, right around 1 o'clock, 12:45, 12:50. We hit a pivot. We moved above it, and now we're trying to push off of it. Not a bad day. Not a bad day.
We find ourselves in, I'm going to agree with most of what's been said thus far. There is a strong case for a whole story, the duration of it in question, but there's no doubt that.
All right, rejected. Rejected. Apple still trying to push through this area. Apple.
To us, it's a little bit early for that. Yes, we believe that valuations in small cap looks favorable, but are we ready? No. In the next 6-week time frame that you just brought up, yes, mega tech remains the place of most confidence. When the bears bring up to us the story of the debt, the issue of the debt, we look and say, okay, if we have interest rates below 5, we have oil below 100, we have some stability from a rate perspective, then the lever left to pull to offset debt is growth. And what has been the praise this year, the catalyst for where we see
Okay.
names just take off?
NVIDIA had a nice run up from the low. All right, starting to bounce off of VWAP.
We're still very much of the camp that this could be the roaring 20s of productivity. We're just a couple years away from that.
So you're not as concerned about the deficit as some others are, even as they suggest the charts, so to speak, of the cost of funding the deficit are, I think, in Stan Druckenmiller's words, scary. Right? He was on the network last week. He's not the only one that has that view, and rates may not be at 5%, but they're still not that far away either.
Absolutely. And I think there's a couple of things going on here. So when you think about when you think about yields today, they have to be high enough that people are willing to take the 10-year and stick to the duration of it. They have to be, if they come down some, it's cheaper to service our debt. If we think about it in the simplest way, there's only 3 ways to offset government debt: inflation, taxation, and growth. And there is the opportunity for growth. That has been the energy behind the market this year.
It depends if you think we are, as some bears would suggest, we're late cycle.
Yes.
So that, it's like a fly in the ointment of that view.
Yep.
Do you think we're late cycle or not? You must not.
I would tend to say no. I think this is, we have to look towards a different playbook. And there's curiosity within our firm around to what extent can you really say the Fed is battling the reacceleration of inflation from the 1970s, when the thing we're talking about often, certainly in the first part of this year and then again in the last month, has been the contraction in them too. And so they're not identical. And the volume of money, of course, could be part of that conversation. But I think to just hold tight into the bear camp going into 2024 could not prove right.
Okay. Do you think, Anastasia, that earnings are where they should be? Estimates are for 24, or are they too elevated?
I think they're okay for now. And I say that because this economy is not going to fall apart over the next couple of months. And for example, if you look at 2024 estimates, I think they went from 12% to 11%, and maybe that seems fair. But I do think there's a lot more going on when you look at the micro. And for example, when I look at the earnings revision, we went through a period of time in the third quarter where earnings revisions, the upward ones, were outpacing the negative earnings revisions. But guess what? We flipped right back, and the negative earnings revisions are once again taking hold.
Isn't that a problems like I don't know, Bob Pisani had a piece last week where something like 60% of the companies that had reported up to a certain period of last week had earnings revisions that were down. That's not a problem?
Well, I think that's, again, a concern going into 2024. I think what the market is going to focus on right now is the consumption story. And for example, when you look at, it's not going to be a Taylor Swift summer again in the fourth quarter, but if I look at the real-time, real-world consumption today, it is still tracking a little bit slower than it was this time last year, but it's still on pretty decent pace. So I do, Scott, think that at some point, as there is going to be more concerns about the economy, that 11.
All right, trying to push through this area. Looks like we might be able to.
But you say avoid discretionary, though. You're making a scenario in which the consumer is still strong enough.
Okay, Apple hanging there.
Those types of stocks doing well.
Apple.
There's the top line, right? And I do think the consumer can sort of drive the top line for some of these corporations, but at the same time, if you look at leverage ratios for some of the consumer staples companies, for example, like consumer discretionary, they're going to have to pay more. Make its way through the system. Where I think we have to be careful.
Snowflake pushing a bit higher, coming out of a squeeze. Off the worst levels of the session, pushing higher at the best levels of the evening session. Amazon's starting to push. Apple looks like it wants to go some more. They keep bidding this up. Blocks keep coming through. Amazon, Tesla, Nvidia, over and over and over today. All right.
The opportunity to be more nimble, meaning if they were late to fight inflation, are they early to say this is different and start to loosen to see what the experience of that reacceleration of inflation is? And so, again, I just don't want to get too one-sided in our positioning for the year ahead without remaining kind of at least leaving some opportunity on the table for it to be positive.
What I've heard the last couple of weeks is that there's never been some of these interest rates have never been a more attractive time for the 60-40 portfolio. That bonds are attractive, stocks are attractive. Can you make a credible case that stocks are as good a value right now as bonds? How would you assess that?
All right, so S&P going a bit more now. S&P on the move. On the move. Okay, we're starting to push through this VWAP now. Back towards resistance. Tesla breaking higher. Tesla going. Snowflake, Apple, Google at 130. Trying to push through this level, Google. All right, a little rejection there.
Anastasia paints this picture of this competition that still exists. Whether it's cash, it's in the short end of the treasury curve. they still deemed to be too risky because of the cyclical nature of a lot of those stocks. The S&P 493. Right? When is there a credible case made that those are the ones you now want to move into? Like you want to move out of cash, bonds aren't so attractive anymore, mega caps are exhausted and have, that's where all the flows have gone. But now it's time to play for the other side of whatever level of slowdown we get in the economy.
Yeah, and I think this is where I would say that the 60-40 does have a lot of opportunity. In the last 20 years, we haven't had a moment in time like this one where you have as many opportunities for income. So whether you seek investment in the private credit market, we're very much aligned contextually there, or the opportunity for a highly rated company.
The cumulative trying to cross over, getting rejected. All right, so there goes Tesla. Tesla's starting to go now. Tesla. There goes Tesla, starting to push. Look for it to move through VWAP, much like NVIDIA did. NVIDIA came off the lows as well. Push right through VWAP. That's what it looks like on Tesla at the moment. Tesla. Buyers coming in. Shorts covering. Look at the volume.
And DA Davidson is upgrading Booking Holdings to buy. Travel demand remains robust, and analysts like Booking's third quarter results and want to take advantage of the stock's lackluster performance in October. Shares up 4%. Got it.
All right, we'll see in just a minute. We are just getting started here, and we have a big interview coming up. Exclusive. Billionaire investor Mark Lazar joins us right here at Post 9. Tell us what he's forecasting for the markets, where he's finding new opportunities as well. We are live from the New York Stock Exchange, and you're watching Closing Bell.
All right, trying to push through one more time. Tesla looking pretty strong. There goes Snowflake. Snowflake pushing a bit higher as well. All these stocks getting bought off the lows. All have similar patterns. NVIDIA earlier. Off of the lows, moving back towards and through VWAP. Snowflake, same pattern. Turning the corner. Netflix. Same pattern. Not as deep. All right, looking for a push higher. All right, NVIDIA is still going. NVIDIA is still moving. Pushing higher. All right, looks good. All right. It is 3:21 on the East Coast, 3:21, Monday the 6th. Okay.
We're seeing a bit of a comeback in the stock market today. We're off session lows. That's after the major averages notched their best week of the year last week. Let's bring in now Mark Lasry, co-founder, chairman, and CEO of Avenue Capital Group. Welcome back. Good. It's been a while since we've discussed the markets, and here we are. I mean, do you think the Fed's done? Are we come to the end of this long?
All right, rejected. All right, so we had pretty good progress there. Slightly green on the day at the moment.
Which we'll get to. I mean, do you think we've seen a cut in interest rates?
All right, we've got a little bit more than 37 minutes to go. 37 minutes. NVIDIA earnings end of the month.
I think people believe that. I don't disagree with you. My view is that
Bookings.com maintaining the top spot on the NASDAQ performance-wise.
it's fine. Like, if you're flat, up one, down one, it's fine. What the Fed doesn't want is us growing at 4%.
How would you assess the job that Jay Powell did, or is still doing? Right? They're not. He's not standing there declaring victory. But if I would have told you 18 months ago, Fed's going to hike by more than 500 basis points in 18 months, and we're going to be talking about the kind of growth in the economy that we still have, you would have said what? You're crazy?
Yeah. I would have asked, where are we, what institution are we putting you in?
Yeah.
Because that wouldn't have made any sense.
Well, does it make sense to you now how we've remained as strong as we have in the face of all that?
I'm surprised. I mean, what I know is we're lending money at like 10 to 15%.
Still.
Yeah, people are having a hard time borrowing. So there are issues within the economy. If you're a good company, you've got no issues. But if you've got a problem here,
VIX starting to turn now.
so that's why they're coming to firms like us here and in Europe. So there's issues, and the question is that going to get worse, or will it sort of stay there? I'll be surprised if it doesn't get worse. I hope it stays where it is, as we all do.
I've run into a lot of people lately who are in that business. It's one of the hottest areas, private credit, direct lending. Do you see that as well? That more firms and people you know who are, competitors in some respects to what you do are doing that?
I do, but the reason for that is because there's so much demand. Right? Nobody's coming in, and whoever's coming in is able to lend money. I mean, what we're finding is you've got more and more people who need money and less banks who actually are lending. So that's sort of why you've got this opportunity. The market absorbs the vacuum, so we're all stepping in, and that's the issue. Is banks should be doing this, but they're not.
Yeah. What's your assessment of the banking system right now? I mean, you point, regional banks have been probably the most acute point of concern since Silicon Valley Bank. That seems to be where a lot of the concern about real estate lies and refinancing and the like. What's your assessment there?
Look, I think there's massive issues. There are. The problem is, and the way you solve those issues is you just keep extending. So those banks are not selling those loans because the market price for those loans is a lot lower and they'd have to take a bigger hit. So in essence, what they're doing is they're just going to keep extending. And that's how you sort of push the problem off. But if you have to mark to market, like we all do.
All right, pulling back now.
That doesn't want that to happen. So therefore, don't let the banks keep doing what they're doing.
What do? You keep pushing it off in hopes that rates come down and the economy stays strong enough?
You hope that rates come down, right? And that as the economy will start picking back up, if you can push it off for 2 or 3 years, you should be okay. But that's what happened in 2008. 2009, if banks had been forced to sell, they were going to go below their capital requirements. The Fed didn't force them to sell, and banks kept pushing it off, and then the economy and lower rates saved them. That's sort of, everybody's hoping the same thing is going to happen again.
Do you think people are making too much of an apocalypse that's coming in real estate, commercial real estate, or no? I mean, you've heard that for the last 6 months at least.
I think they are, just simply because there's no event that's going to force a bank to sell other than the Fed, and the Fed's not doing that. So if you're not being forced to sell, you're fine. Like, look at your house. If I said to you, your house is worth a certain amount, if I said you got to sell it within 24 hours, you're going to lose money on whatever it's worth because you don't have the time to do it. If I said to you, you have 2 years, then you have the luxury of time. You can wait. You can listen to offers. That's what's happening on a global scale because none of the money center banks are forcing the regional banks to sell those loans.
Are we on sort of like an hourglass that's now turned upside down, and the Fed starts raising a very big hourglass, and the economy stayed, as we said, stronger than I think anybody suggested. But is it just a matter of time before the sand goes all the way out, or do we get a chance to turn it over? Or do you think we're going to have a recession ultimately in 24 now?
I think we will, but I think a recession, remember, is just 2 down quarters. That's the only thing that's going to force the Fed to lower rates. If you don't have that, rates stay where they are. And the problem is rates where they are today is causing issues for consumers and it's causing issues for companies. It's literally to buy a house. It costs you twice as much as it did a year ago because rates have doubled in a year. So,
all right, these stocks are pushing a bit higher. 30 minutes to go. 30 minutes. There goes Netflix. Netflix popping. There goes Tesla. Tesla following through. All right, Tesla was higher this morning. It faded. Now it's moving back up.
Interesting. I mean, the question is, he's getting paid enough for that risk. He must think he is. Right, that's exactly it. He's thinking, I'm getting paid X, and the default rate is going to be a lot lower, so I should do that trade. I get that.
Maybe you're thinking like triple B's or lower. Right. Not exactly. We're not talking about A.
No, he shouldn't be. And then the question is he leveraging that? And if he is, that's sort of how he's generating those returns. We sort of look at it the same way, but we're not leveraging it. But we think we're getting paid 10 to 15. trading, and the risk of default is so small because of where we are in the capital structure. He's going to do it with public bonds. I'll bet you he's going to leverage that a little bit, but he's also thinking, look, the economy's going to be fine. It'll be flat. We're not going to have a recession. If we do, it's very mild. So I'm getting paid a lot for that risk.
See, I was going to ask you what the default rate is on the direct lending you're doing, but you just said you're so high up on the structure that you don't. That's not a concern at all.
Not right now. I mean,
VIX. All right, so the FANG stocks look pretty good. All things considered, FANG looks pretty good. Snowflake and AVGO, they've been red all day. Tesla trying to get back to green on the day. Apple pulling back. Apple can't get above 180. That's a big level. Apple. NVIDIA continuation. NVIDIA trying to push through that pivot we hit at 1130. We're pushing through that level now. And there goes Tesla. Tesla trying to get back up through VWAP. All right. Be nice if we closed for the bulls. It'd be nice if we closed in the upper half of today's range. Doji spinning top above 4350. 4350 support held. S&P. That's good. 4350 held. Resistance 4376, 4380. Look forward to maybe retesting that tomorrow. 4376. SPY trying really hard. It looks like institutions are buying. VIX dropping off again.
Recently launched a new sports investment fund, working with some of the biggest names across all of sports. Why a sports fund?
I think there's a lot of opportunities there. I think it's going to be in new leagues, new teams. It's my view of it was that the NBA and other leagues will keep on growing, but I think they'll grow sort of where they had over the last 4 years, around sort of 10% a year. That's great, but I think you'll have opportunities into newer leagues where you can grow at multiples of that.
You mean the days of pulling a Lasry with buying into the Bucks where you did and selling it for like 7 or 8 times or over?
I think it's really hard to do that over the next 10 years. I think the team's going to be worth more. I'd be surprised if it's worth 7 times.
Interesting. How big's the target for the size of the fund? Can you say?
Yeah, I think we've got a cap of $2.5 billion.
Okay. And how far are you along that road?
So I think we'll have the first closing, and about a month, and then we'll continue to do that. But we've already committed to buy a number of franchises or teams in the last month. So we've been really busy.
Yeah, speaking of the TGL team, San Francisco, right? Steph Curry, Klay Thompson, Iguodala. It's so funny because on halftime today, I spoke with Rory McIlroy, Tom Warner, who have the Boston team, and here's what Rory said, and we'll get your reaction to it.
We're trying to bring the game of golf into the 21st century. You know, I think a lot of people will connect with the fact that we're playing indoors. It'll look nothing like traditional golf. It'll look more like an NBA game, hopefully.
What do you think of that? I mean, what's the attraction for this league to you?
Look, I think what they're trying to do, and obviously I'm a believer, is I ended up.
Come on, guys, let's push this higher. NVIDIA continues. NVIDIA having a nice day off the lows. NVIDIA, good. NVIDIA's up 688. Netflix pushing. It's up $1 now. Netflix. Microsoft just sitting here along with Apple. Let's go check end of day. See who's in play. End of day. All right, Eli Lilly in the upper half of the daily range. Dominion Energy. Dominion Energy. The utility is getting bought. XLU. For the last few weeks.
Steph is obviously prolific and a great golfer in his own right. How'd you get him? How this happen?
We've been friends for a while. I think it's exactly what you said. He loves golf. It's something that for him made a lot of sense. I'd love to tell you that it's really Steph and I are on the golf course playing all the time. You know, he's scratch and I'm probably 100, so I don't think it's that enjoyable. But I think part of it is something that he's interested in. Also, he also believes that this league will be something that's different and appeal to more people.
I looked at the list of athletes you have, and they're really a cross-section and globally, too. Harry Kane, right, global football star, Candace Parker, fabulous basketball player in her own right. Do these athletes put up their own money to be a part of this fund, and what sort of return on investment can they expect over time?
Well, hopefully we'll make, you know, the goal of any fund is to make 2 times what you've invested. Right, so the question is that over 3 years, 5 years, or 10 years? We'd like it to be in the smallest amount of time period. I think for the people who are part of it, they'll be putting in some of their money, and they'll be involved in helping us find new deals. Laura Holiday actually has been great because she's been helping us on women's soccer, and we've been involved in that. Candace Parker has been helping us on things we're trying to do on the WNBA. Right, so everybody is getting involved in different things. Harry Kane has been helping us on teams that we're looking at, you know, football teams, the American soccer teams, and football teams in Europe. So it's actually been extremely interesting and fun so far.
So you're still involved in pickleball,
yes,
right? I asked you guys this afternoon the same type of question, but all of these second and third tier, as you would call them, sports, and the still fixed number of eyeballs that everybody is going after, and the confidence that you must have that there are enough eyeballs that can watch pickle or padel or whatever, and this.
Right, so I think part of it is the more engagement you have with people, the more they're going to want to watch and be a part of it. So it's not, are we taking people away from the NBA or the NFL? Really what you're doing is that you're going to be able to get...
All right, we got 20 minutes to go. Netflix is going. Netflix going. Carvana. Netflix on the move. Netflix.
So the reason you're watching her is because you're watching the best in the world compete. That's why you're watching it. It's different. And you find it interesting. People will watch, whether it's padel, whether it's pickleball, whether it's TGL. It's getting more people involved because one thing they love is sports. And they want to be part of it. And our job is to get them more engaged. If we do that, then they're going to watch it.
You said at the outset when I asked you about Tony Lasry, you know, the incredible trade that you made, if you want to call it a trade, incredible investment that you made in the Bucks. Is this all a sign that we won't see you be a part of the big four leagues anymore? Would you be an investor in a group in one of the four major sports again? Did you scratch that itch and now it's time for this? How are you assessing that?
I think a lot of that is going to be a question of price. Right? So there's always going to be opportunities.
All right, we can't seem to get through this area, S&P. We're getting rejected. While the FANG stocks move up towards resistance, 1120, we hit this level on NVIDIA. Looks like we could get through this area. IWM.
But if you did, it would probably be NBA, it sounds like you're saying?
No, I think it'll be NBA, NHL, baseball, yeah. Football, and Michael Strahan's helping us.
NVIDIA.
I think we will have the ability to do any of these. And
Flat VWAP.
Can you still get into the NBA celebrity basketball game for the All-Star weekend?
that's going to be up to I can go to the game where I'll be able to play.
Decent jump.
Yeah,
that's solid.
that'll be hard.
All right, thanks for being back.
Thank you.
Great seeing you again. Yeah, pleasure's ours. That's Mark Lasry of Avenue joining us here exclusively. Up next, we're tracking the biggest movers as we head into the close. Christina Partinello standing by once again with that. Christina?
Well, we have lower food away from home volume. It's driving one stock down. And an analyst says Paramount is losing out by not putting up its business for sale. I'll explain all that next.
All right, we have 17 minutes to go. 17 to go. Groupon still pushing higher. Groupon. All right, starting to fade from the high. Starting to fade. Apple. That 180 level is a major
Tickler minus 800.
gamma strike and call resistance at right around 180. Flat VWAP. Merck looking for higher. What is Upstart doing? I know Mondo is in Upstart. What's that doing? Upstart. It's off 87 cents today. Did gap up. Did gap up on Friday. We're pretty much inside of Friday's price action. Upstart. Upstart. Oh, you know what? Before we close for the day, let's go take a look at what's performing on the watch list. Most of these were set up, but we needed to see follow through and volume. Okay, watch list. That includes some extended watch list names. Okay. Eli Lilly, top of the list. Looking really good. Eli Lilly. DraftKings. Following through. DraftKings pushing right through this area. Relatively inexpensive stock in a hot sector. Consumer discretionary.
Trading at $12.67 right now, down about 8%. They were originally bullish on Paramount on the idea that it was potentially up for sale, or there were meaningful parts of it that could potentially be up for sale. The analyst says that they no longer believe that Paramount is serious about selling its assets.
Are you more optimistic now about the chances for a year-end rally? Head to CBC Closing Bell on X. The results just after this break.
During this year, and it's made up of a big sample size. It's made up of all U.S. domestic stocks, and it's lagged some of the other markets. It doesn't have any of the Magnificent Seven in there to drag that index higher. So yeah, it's lagged some of the others. So it was actually a really good, healthy sign last week that the Russell was playing catch up in terms of percentages, but not today, Caroline. As 3 of the 4 indices are relatively unchanged to slightly higher, and the Russell, like I said, heavy.
All right, so Russell has a clear direction today. Rest of the market, not a whole lot of conviction. As you look ahead to the news that's coming this week, what could give this market a clearer direction, Kevin?
Well, I think what's interesting.
We're just stuck here.
3 days we've got bond auctions, and bond auctions, the market is going to wait for that 1 o'clock Eastern, noon Chicago time. How did these bond auctions go? And here's the numbers, Caroline. Tuesday, 3-year note auction for $48 billion. Wednesday, 10-year note auction for $40 billion. Thursday, the 30-year bond auction for $24 billion. All considered about $112 billion in debt. So let's see what that does to the overall notes and bond market. Does that have some type of effect? Remember, when they announced this, the market accepted it pretty much in line as expectations, but the Treasury has about 102, just over 102 billion dollars in bonds coming to maturity during the month of November. So obviously they've got to replace that. I think the next couple.
All right, we're just stuck in a stalemate between the bulls and the bears right now.
And I think the reason we're not seeing this play on shareholders, like the shares today, like you mentioned, is the fact that this is such a relatively small portion of their overall revenue. I mean, this is such a massive.
Nope, fade. Trying to hold on to green, S&P green on the day. All right, we got 9 minutes to go. Can they push this higher? All right, VIX is dropping off now. VIX is dropping off. Let's see what the dollar is doing. Dollar. All right, the dollar. Dollar is higher. And the U.S., let's see what the 20-year yield looks like. 20-year starting to fade. All right, that's a good sign. U.S. 10-year. Looking for this to fade. And for junk bonds to be moving higher. Junk bonds and high yield corporate. We want to see that higher. Weekly, daily. HYG.
That means a lot for my community and for every community.
8 minutes to go. 8 minutes. Groupon continues to push higher. Groupon. Let's see, GRPN. Groupon on a buy, pushing back up to 52-week highs.
Available anytime, anywhere, on any device for free. Schwab Network, empowering every investor and creating every bucket day. Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
In 6 minutes, we're just stuck in this range between 434.80 and 435.20. SPY trying to stay green on the day. All right, this looks a lot better. Looks like we might actually push.
Over the last week that I guess you're due for something there.
You call it pretty mild, cooling off, profit taking. Russell, we mentioned up 7.5% down, 7.5% today. Now, two stocks are down for everyone that's up today. So you are still seeing that typical uneven type performance. Nothing really to be concerned about in the moment. Do say that it didn't take much for the 10-year yield to go from 450 to 465 today. No real news. Now, there has been a lot of corporate bond issuance today. Monday after a Fed meeting, often the case. So $20 billion or so hitting the market. It's been absorbed nicely by the corporate market. On the other hand, it sometimes pressures Treasury. So if that's the reason, we can deal with that. Range-bound Treasury yields are probably fine to have equity exposures normalize and maybe have
Okay, trying to push a bit higher. VIX is dropping off.
I still say that the bulls have a little more to prove only because you've been stuck.
All right, nice rally. Nice rally with 4 minutes to go. All right, going to paint the close. We'll have a green close. I don't know if it's really that impressive. Not very impressive. I mean, it took us to the lows of the day. We saw buyers come in at the low, but we're still overbought and at resistance. So it's going to take some time to work this off. Okay. Spinning top. We are closing the upper half of the daily range. I'm not going to discount the fact that this looks better than it would have if we had pulled back. But still, okay, growth and value, both above the 21-day. Equal weight. Still inside of Friday's price action. Okay. NYSE. We've got 2 minutes to go. 2 minutes to go. Bullish volume looks good.
More optimistic on this name. First, although, like you mentioned, 50% of NXPI revenue is exposed to the auto sector, it lacks the heavy EV exposure, which brought down silicon carbide producer like on Semi. Secondly, NXPI has been under shipping demand to limit and control its inventories, I should say. And then you've got
Okay, we're back above the green line, the zero line.
The Internet of Things. That is a segment which should hit about 594.
All right, NXPI after the bell. NXPI looking for a pop. Okay, 2 minutes to go.
See you in OT. Christina, thank you very much. All right, so Mike, we got about a minute left. I'm trying to think of like what is out there that's going to influence people now that earnings are all but done, the Fed meeting is over. CPI is, I'm just checking the date right now, it's not even until November 14th. No. And then there's, after that it's NVIDIA earnings.
NXPI, wouldn't mind a trade on NXPI after earnings if it does gap up or dips a little bit into last week's price action. Good company. All right. Oh, nice pop into the close. S&P. Big boat. You got your wish there, Frano. All right, folks. Have a great evening. I'm out of here. Take care. We'll see you tomorrow. Ciao.